And just like that, we are live. Happy Tuesday, everybody. Hope everyone's having a good day. Hope everyone's having a green day. Maybe more importantly, shout out Green Day. Great band. I know it's one of Aaron Thomas's favorites. But take a look at what we got going on today. We will be talking about earnings. We've got some big earnings this afternoon after the close. Let me get you the full rundown, but I know off the top of my head, we've got AMD, which I know I'll be watching as a I probably hold some AMD through ETFs and whatnot, but I'm more of an NVIDIA holder, but NVIDIA will move off of AMD's report. We have Starbucks. Starbucks will be in the spotlight for sure as Howard Schultz has returned as CEO, kind of seeing what he's doing. Airbnb this afternoon. Airbnb is getting beat up, down 5% today. I'm actually looking at Airbnb, seeing if maybe the bar's getting set pretty low for the earnings, if they could have a surprise beat. We've got Lyft this afternoon and then Uber tomorrow afternoon. So yeah, all week we've got big earnings. Moderna tomorrow morning, Etsy tomorrow after the close, eBay, Twilio, Shopify Thursday before the market, Block or Square on Thursday. So again, we'll be talking about earnings today. We'll be talking about all the biggest headlines in the market. But joining us here in a few minutes will be the man, David Green from Wall Street Global Trading Academy. David Green will be walking us through what he's been trading today. He said it's been a great trading day so far, so excited to get David on. After that, we'll have Christian Fromhertz from Tribeca Trade Group. After that, Dave Mazza from Direxion. And then Tim Quast from MarketStructureEdge will round out this beautiful Tuesday show. So go ahead and smash that like before we get going. I'm going to go ahead and play that intro, and then David Green will join us.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, David, how you doing today?
What up? What's up, Aaron?
Not too much. Just trying to stay afloat, trying to stay green. The markets have been crazy, I think, since the last time we spoke.
Yes, they have. Unbelievable. I was just looking at financials is what we're all about today, right? Financials are leading the way up. JP Morgan's ripping, Goldman Sachs ripping. The financial index, which is the FAS, is ripping, all making new highs at this moment. Because I was looking at it at AMD, which we'll talk about. We'll talk about earnings. I know you wanted to talk about that a little bit. And NVIDIA and Facebook and all these things are lagging what the market is doing today. So nice rotation into the financials, which I guess can be expected with the rate rise tomorrow, right? Banks do better in a rising rate environment.
So yeah, I mean, one would assume so. Make more money. There's also a lot of money out there with inflation and everything. So
Exactly. Today's just been one of those days where everything technically lined up beautifully in most of the stocks that we're looking at. XOM paid me. I got stopped out on a trend. That's good. I mean, Quinn, you should have made a bunch of money in XOM if you got into that trend early. Beautiful, beautiful, beautiful. So this morning, as we can see in the spiders, right? I mean, just insane. Every freaking 5-minute bar had a huge tail on it from 9:30 until right about 10:45. 10:45, we started to find our footing, and now we're just in a nice uptrend right now. We're looking to do a little short in the spiders if we spike up to about the 420 level, 420.30, and we'll see if we can hold this trend that we're in now. I mean, we have to say this is positive, right? We had a huge rally off the lows yesterday. And not only have we held that, we're actually building on it again today. So fingers crossed that, maybe at least we've seen a temporary bottom in the market for a little bit anyway. Our first real test, guys, technically is going to be around 422.50 in the spiders. If I show you my daily chart, all right, this is the trend line that we've been following on the way down. So, 422.50 is our little resistance here. We got to get above that to maybe, reverse this little downtrend that we've been in for the last, 8 days. So, I don't think it's going to be as so important what the Fed says tomorrow. I think we're going to get knee-jerk reaction like we always do. I think they're going to raise 50 basis points, which everybody expects them to do. I just can't see us getting in, and I'm talking, a little longer term here, guys. I can't see us getting any real traction until we get some kind of resolution in Russia. I just think that's a huge overhang, and I can't see us making new highs or anything like that in the market until we get some kind of resolution with that. I think if we do, we can be off to the races. So fingers crossed. I mean, this is good action considering where we were yesterday. So far, so good for today, but that can change in 5 minutes too, as we know, right?
Oh, yeah.
Yeah. So a couple of trades that we did early today, I'll show you guys using our technical analysis, and we could take questions and talk about whatever you guys want. Aaron, we can talk about AMD earnings or whatever other earnings that you want to talk about. So NVIDIA is one of the stocks that we are always looking to trade. And you guys know if the technical analysis we use is our moving averages 9, 15, 30, 65, and 200, and then our pivot points. And one of the first trades we got this morning was NVIDIA, which went quickly down $6, hit our pivot point around 190, 160, and the stock went up $5 from there. Of course, we didn't catch $5, but we didn't have any pain in that on the way down. It was a very good trade. Coin. Everybody knows coin, right? This was very good to us this morning on the short side. Stock went from 120 to 129. Exactly hit our pivot point up here at 129. And again, guys, when the stock is moving up, we look for resistance to short it. And a few minutes later, the stock had gone down almost $4.50 from there. Just a bunch of stuff that was just beautiful.
Can we look at coin on the daily real quick?
Yes,
this is one that was just making new lows, and then we've gotten this bounce kind of the past couple days, but it's hard whenever you have a stock like this that you try to look left and find some levels, but you can't find anything when you're looking left.
Not on the downside, we couldn't. We got a little oversold down here. We didn't quite have the relative strength down low enough, to jump in and buy some. But again, look what we did today. This was perfect, right? Our resistance on the chart, and this is the 9 EMA. So here's our daily trend line. It was 129. That was on 9 EMA, and we needed to clear 129 with some strength, and then maybe we could see 135. But if you see what happened today, and this is why technicals are so beautiful, you had to try the short there the first time. It was a big level after the stock rallied up 2 days in a row, and we could not get above that level. So again, we need to clear that 129 level first on the daily chart to get any kind of traction in this. I mean, these things, look, this has been bad look at the weekly charts, even worse, right?
I know.
I mean, we can go to 150 in this and still be in a downtrend.
Right.
And earnings are out, what, the 10th? Yeah, so next week the earnings are out. I guess that's a catalyst for the next big move. Between now and then, we'll just trade with the market. But that'll be the catalyst.
Coinbase will tend to trade with Bitcoin too. But I mean, Bitcoin's been pretty weak today, and Coinbase is having a strong day. So maybe finally some fundamentals or whatever are catching up for Coinbase. I don't know. So I'm just curious. I'll be watching this one for sure, because I wouldn't be surprised if we continue to make new lows.
Again, this is going to be on the earnings, right? I mean, there's no catalyst between now and then. And if the market goes up, it'll raise it up with, along with all the other stocks that are going up. Kathy Wood's been taking a lot of heat lately, right?
Oh, yeah.
Well, yesterday she had a good day.
And she's had a nice little bounce, but apparently her latest venture was what? T-Doc, I think, guys?
Well, she bought more after the earnings collapse.
Oh, she did. All right. That's good, at least. Yeah. I guess you have no choice. I mean, at some point you got to.
Yeah, she's actually made some money since. I mean, the stock is up from 30 bucks after the earnings to 38.
Is T-Doc up this morning? Is it up this morning?
Yeah, T-Doc's.
That's the fourth day in a row.
Yeah, T-Doc's been up 4 days in a row since the.
If you bought Teladoc at 9:30 a.m. the day after they report, you've been up for 4 straight days.
But by quite a bit too. I mean, 30 to 38 is.
29 was a low. We're up 25, 26% from that.
Yeah, so she's made some money off buying the dip there. Good for Kathy.
Well, someone told me her average was 163.
Well,
we never said she made money on the total trade, but she's made money since whatever it was last week.
I guess your average could be 163. The stock was 308, right?
Yeah, I mean,
What about and then we can talk AMD because I know we want to talk AMD Nvidia, but I want to talk Airbnb too, David, because this stock's been getting beat up today. Before am I wrong? Did Airbnb report earnings this morning?
No, it's tonight.
So
tonight.
yeah, okay. I was just making sure I wasn't wrong because the stock's trading down like it missed earnings or something.
Is it?
Yeah, tonight after the bell.
Is it? Oh yeah, tough day.
Yeah.
Ooh.
So I'm curious about this one because I feel like Airbnb won't have to say the same thing that a lot of other companies are saying in terms of supply chain issue. You know, I mean, they have their supply, which is the houses that people are listing. I think people have still been traveling. I mean, I've traveled a couple times this past couple months. Flights have been packed.
Flights are expensive.
I know anecdotally, I know a lot of people that have been traveling. I don't know.
I have a hunch as to why Airbnb is down today.
Okay.
It's got to do with Expedia, which reported earnings last night, and they weren't great. So I didn't even know Expedia was still around. I mean, that's not true. I knew that, but
yeah, Expedia's getting an absolute smackdown today. It's down 20 points.
Yeah. Wait, quick question from the chat. David, do you use a pivot point on your charts, and on what time frame?
Yes, pivot points. If you're using Thinkorswim, I'll show you the exact setting. Okay, so in pivot points, we have 3 support and 3 resistance levels if you're using Thinkorswim. So as long as you put 3 support and 3 resistance levels and have show plot and all these things clicked on all, they'll automatically come up on your chart. And we absolutely do use them. I think NVIDIA gave us a trade. I showed you guys. NVIDIA gave us a trade off the pivot point this morning on the long side. And I think Coin gave us the pivot point on the short side. So, yeah, we use them as we would a regular moving average. They're usually going to be better because they're going to be further away. A stock will move further to hit a pivot point than to hit one of our regular moving average. So the odds are better when a stock hits a pivot point that we're going to get a reversal from there. And you can see Coin went down $4 when it hit that. I think Microsoft also did it this morning early. It hit one of our pivot points here, right around 281.50, and went up $2.50. So, yeah, pivot points are very effective. You use them in your charts and learn how to read them. Okay, what do you guys want to talk about? Do you say AMD?
Yeah, we could talk AMD.
Well, let's go back to Airbnb first.
Yeah, we never quite finished the Airbnb conversation.
Can you guys get me the expected move tonight? Someone in the room on Airbnb?
I'll get it for you.
And again, this just has to be in sympathy with Expedia.
David, you have Thinkorswim right there, man. All right, I'll get it for you. Airbnb.
I'm gonna guess $12, $15. There we go. 16.35.
10%, so $16.
Yeah, 16.35. Well, I mean, no one's expecting it to be good. If I go daily and weekly, all right, let's go daily and weekly.
I don't know. It's held up okay relative to the rest of the market, hasn't it?
On a weekly chart, it has. That's a monthly chart. I'm sorry.
Oh, same difference.
Yeah, even weekly, it's fine. I mean, today's the only day it's really getting a smackdown, and that's because of Expedia. So. Right. You know, again, the way I would trade this thing is I would just put markers up and down $20 and then see how it reacts off that, you know, right around the expected move is $16. If I'm doing anything trading this, it's got to be through options, right? You don't take a position on this thing going into earnings. I mean, that's just pure gambling. So I don't know if you're in the stock long term, you know, it's tough because nothing has worked long term in some of these stocks, right?
I do like this stock long term. I almost hope it gets beat down in earnings and I can buy it at 120 a share. Or whatever.
I want to note that I did throw a trade idea in the trade ideas widget in Benzinga Pro this morning on Airbnb. The idea is very straightforward. If I zoom in here, you can see my idea. Airbnb, if you only look at the day after its earnings report, so in this case, we're talking about tomorrow, right? It hasn't been public for that long, right? But in its history as a public company, it's closed higher the day after its report every single time. Now, those gains have literally never held. The stock trades down. If you fast forward 2 days out, 3 days out, a week out, 2 weeks out, Airbnb trades down every single time, right? But if you look at just the first day, it trades up by an average of 5%. So for a pure day trade, talking about just tomorrow, today to tomorrow, history suggests Airbnb will pop tomorrow and then give it all back and then some.
Yeah, but like you said, we only have what, 6 reports?
Yeah, again, there's not that much history to go.
Five.
So I'm looking at all of them, Spence. I got them up on my chart, right?
Yeah. All right.
Well, here's the first one, big pop. Here's the second one, big drop.
Yep.
Third one, up. Fourth one, up. Fifth one, up. So 4 out of 5, it has worked. So 80% of the time, it
works every time. Yeah.
So 4 out of 5 times it has worked. So
80% of the time works every time. So
let's see if we've got some other
odds, right? Everything. When you're making a trade, all you want to do is put the odds in your favor, right? So
that's it.
Let's see if we've got some other tickers flying in the chat. Like you said, David, I mean, financials have really
crazy today. Yep.
Have been amazing. Yeah. I mean, JP Morgan is a monster. I said last week, I think I might buy some JP Morgan. And Spencer's like, well, if you're going to buy a bank, why not buy the biggest one?
I did say that. Yes. That was like Friday.
Yeah. And again, given this, even though, guys, right? Look at my daily chart of JP Morgan. This thing's been horrible. It's been horrible on a daily chart, even with the interest rates and everything else. We're just now getting back to a little trend line, right around $124. So I guess these things are expecting, tomorrow. Same thing with Goldman Sachs, right? These things have not been acting well for the last couple of weeks. They've been bad.
Here's another thing I think is interesting with the bank stocks is looking at JP Morgan's chart. Pre-COVID levels, JP Morgan was trading at like 137, 138 a share. So February 2020, before the market crashed.
Let me get that.
We're below that. We're at 123. So we go from 138 before COVID to 123 now. And since then and now, we've increased our monetary. There's more money out there. So there's more money for banks to be made. Interest rates are going to raise higher than they were. Like it's all these good news for the bank stocks. And the bank stocks are lower than they were in 2020. It's crazy.
Yep. I mean, here is what? October of 2020. The stock was trading at $138 in October of 2020. So here we are 2 years later. Wow, this had a beautiful monthly level down at 117 or so. Yeah, we'll see how they react tomorrow. Usually it's buy the rumor, sell the news. And these things have not been good.
Yeah, and Spencer, what's the latest on our the percentage chance of the interest rate raise tomorrow?
Oh, it's like 100%.
100%, 50 basis points, right?
Yeah.
50 beeps.
Yeah.
So that's where I see it is it's already baked in. We know what's going to happen. I mean, the only thing that would be if it was like a shock 75 beeps, which would be crazy, or shock 25. But I think it's all priced in and essentially a given that we're getting 0.5% tomorrow.
I agree. And, any knee jerk up or down, we can probably get on the opposite side of that because, again, I don't even think that's the most important thing going on right now. It's important.
No, I don't know. I don't even think the interest rates have anything to do with inflation right now. I think inflation is due to the supply chain and demand increase in certain areas. And I don't even know how much raising interest rates is going to do anything for that.
I agree. I mean, we had our first, negative quarter of GDP in I don't know how many years, right?
So now's the time to raise it, right? You want to raise interest rates when you're booming, when the GDP is growing too much, not when it's slowing down for the first time.
Exactly.
It's crazy.
If we have negative GDP next quarter, we're in a recession, technically.
The problem is the Fed really has that one main tool in their toolbox, interest rates, and that's really the main thing they have control over. So they're trying to do something, but is it going to be effective? We'll see. Is it going to be effective? Hopefully not.
Your guess is as good as mine. I mean, usually I'm pretty confident that when we have events like this, that the market will get back and make all-time highs. And I still think we will, but I think it's going to be a long time before that happens this time, unless we get some kind of resolution in Russia. When we had COVID, we had that big spike down.
Yeah, there are a couple avenues here that could lead to new highs. A resolution in Russia and Ukraine helps. That's one. We're going to get CPI next Wednesday, a week from tomorrow. If CPI comes in out of the blue, let's just say comes in at 7%, and the last reading was 8.5%. So let's just say CPI falls to 7%, and we see, was that peak inflation? Market's going to rip higher on that. If the Fed says tomorrow that we're not going to go too much more beyond
That's it.
beyond 1%.
Agreed. If they change their
maybe 1.5%, then the market's going to love that. So
if they come out and say they're going to be more dovish, the markets will absolutely love that. 100%. Even if they say let's be data dependent from here on out, that would be huge, right? That would be huge for an upside move. But they're so bent on 2% by the end of the year. That's what, 6 more rate raises. So we'll see.
Well, yeah, I'll just show you what the market, as far as Fed, as far as rate hikes, is pricing in right now. As I said, it's basically 100% chance that we're going to go half a percentage point tomorrow. 86% chance that we're going to go 3/4 of a point in June. 80% chance of going another half point in July. That gets us to 2%, the federal funds rate. And then about a 46% chance that we go another 1/4 point in September. So, market's saying 80% chance that the federal funds rate is at 2% the end of July. If the Fed says we don't want to go too much more beyond 1.5%, we think 2%, maybe the upper band, then this whole thing adjusts and the market has to readjust to that, because that's dovish talk, and the market likes that. So we'll see, but very hard to.
Impossible. It's impossible. First of all, we all know what they were going to say. I have no idea how the market's going to react to that. That's the big thing, right?
Well, and then the other question is like we can reasonably say, for example, if the Fed turns dovish, the market will pop. But the question is, then will it hold those gains? That's a whole other beast. Right? And just like with that inflation thing, if inflation suddenly falls down back to where it was for the last decade, let's say inflation falls to 7%, 6%, market's going to rip. But will it hold those gains is a whole other question. And then, of course, there's the whole growth aspect of this. Technology has gotten destroyed. The Nasdaq just had its worst month since October 2008. That was for the composite. Everybody is trapped in these growth stocks that are down 50, 60, 70, 80, some cases 90%. And they're struggling. And I'm in the same boat as them in a couple of cases. So it's difficult.
Check out, guys. Check out my chart I just put up there, Spence. This is a monthly chart of the QQQ.
I know.
But look at the support level. We just bounced off. It was right around 309.60, 309.70.
For now. Yeah, for now we did.
But we did in a big way, too. I'm talking about for a trade. That's a monthly level. All right. A monthly support level on a chart is gigantic. It hit it almost to the penny, and we're up 10 points from there on a monthly level. So, I mean, look, if we break that, we got this would be the QQQ is breaking this level. The next real support I have is 249. I'm praying that doesn't happen, and I don't think it will unless something really crazy happens in the market. Our monthly support in spiders is 390, which isn't that far away from where we are right now. Weekly below that is like 360. So, 360, we're talking down 30% from the highs. I don't know. We hope and pray the market goes up from here, right? This has been very painful for anyone who has a 401k. It's been horrible.
Oh my God, David! I went and I looked at I had to look something up over the weekend, and I went and logged into my account for the first time since like the first week of the year, and I had no idea I knew it was going to be bad, obviously, but it was worse than I expected.
Got to be what, 20% maybe?
21%. Yeah.
There we go.
I was like, I'm going in the wrong direction. Now, this is in reality good news for me because, 401k is a long-term thing, and the year 2022 won't mean jack for me in 20 years.
That's right.
This is good in the long term, but for right now, darn does it feel awfully bad. To be going in the wrong direction. It feels terrible today.
My strong suggestion is don't look.
No, I haven't been.
Especially when you're your age, right? And as long as you're contributing, it's going to be spectacular. It's going to be.
Point?
There's no question about it. It's going to be.
Yeah. All right. What have we missed here on the movers front? Any big movers we haven't talked about today?
The market is absolutely dead right now.
Yeah, it
Completely
felt like
dead.
that. It felt like that yesterday too. Even though like growth was all up yesterday, it just didn't feel exciting in that way. Nothing is really. I'm looking at my scanner tool in Pro, and I'm really not seeing a lot that jumps out to me.
The moves off the low yesterday were incredible. All right. I mean, it was crazy. We had, NVIDIA made a low yesterday of what, 185, closed at 196. I mean, it was crazy. We were looking at the spiders yesterday when they started making that move. And when these things happen, just get out of the way. If you're not long, get out of the way because you're going to get run over either way that you're looking at it. It's insane. This is where you really got to batten down, use your technical, and if you're trading, use your technical analysis and just pick your spots. For anyone that's you got your guys' age out there, this is a gift. It is. This is just a gift that you'll look back in less than a couple of years and say, I don't know. How do we get resolution in Russia? That's my thing.
Oh, I mean, I don't know.
How do we ever get resolution there unless we get rid of it, unless the guy goes away, right?
I don't know. Yeah, no idea. What was I about to say? Shoot, I just had a thought. Oh yeah, David, what about that rally yesterday into the close? Did you see that?
Yes, I saw it.
Yeah.
It was sick. It was crazy. I mean, let's just go back to yesterday.
Yeah.
It was for the last 2 hours, whatever it was.
I know. It was the opposite of Friday's session. We just couldn't.
Yeah, here we go. We made a low of 405 yesterday morning.
Yeah.
405 in the spiders. I mean, the market went up from there 1,000 points, right? We went up 100 10 S&P handles, whatever it was, in, I don't know, a couple of hours, 1:45 to 4 o'clock. And if you tried shorting that rally, any point, you got your face ripped off. I just stayed away. I said, if we're not long, and I couldn't buy it at that point, you just got to stay away and let them play out. It was powerful. But look, we were severely oversold yesterday, right? If we go to the daily chart on the spiders, I mean, we had this giant down day, and to have another follow through down day like that, you're talking about, guys, we were down 2,000 points in a day and a half. My best case scenario, would have been if we closed on the lows yesterday, opened down today, getting nervous for the Fed, then it would have been a beautiful opportunity to buy some stuff and get this bounce. It just happened a day quicker than I thought it would. That's all. And these markets, look at just today, this first hour and a half, it was untradeable. Everything was just all over the place. Any stocks you guys want to look at? Someone mentioned the cold and Boyle again. Boyle's ripping again because of nat gas, all with Russia and stuff. We had a good trade in that last time. We're not stretched out yet. Again, we don't even have close to an 80 RSI. Right, last time we were looking about shorting this, we had a 90 RSI. So even though this stock is up 3 days in a row, I will not look for a reversal swing trade until the relative strength gets up there again. This could be 120, 130 by the time that happens. So,
Aaron, was that you that were you and I talking about the Apple car last week, or was that me and somebody else?
I don't think that was me.
That wasn't you. That was somebody else.
What were you saying about the Apple car?
Well, if you look at the Apple spiked today on a report, I guess from Bloomberg, that Apple's poached a Ford executive.
Really?
Yeah, 31-year Ford executive. Who put this in the chat? Alaska put this in the chat. And Apple has hired this guy. I'm not going to try to pronounce that name. Desi Ukashevich. I'm gonna guess for their Apple car. Every 6 months we get an Apple car headline, but they never talk about this thing publicly. So one day they're just going to drop a car on us.
And you know what? When they do, they're going to do it very well because they do everything very well.
I don't know when that's going to happen, but one of these years, like maybe in the next 5 years, they're just going to drop a car on us, and then that'll be that, and be like, ta-da. But
you guys know how I feel about Apple. I've always loved Apple. Any big dipsy doodle, it's a buy.
Yeah.
Did WDC get a takeover bid this morning or something?
No, it's an
activist
firm that wants to break up the company and unlock the old shareholder value. That's what they want to do.
All right, nice move up, and it hasn't given back any of it. They already had their earnings, so that's another one. I'd look for 3 days up and then short a little. On one day, we spiked up to an 80 RSI. Give it a couple more days, and even if they want to break up the company, it'll probably be trading where it would be if they break up the company. We'll see. Bunch of people asking about AMD. Let's look at a little AMD, right? We'll go right to the daily chart and see what's happening here. Again, another one, just a horrible downtrend. 92.20 is what we have to clear to get above the daily. Expected move tonight is $7.50. So again, if I was going to do anything in AMD, it would be, you know, some options. Let's see where like the 100 calls are trading. They're not going to be cheap, but there's going to be a lot of premium built into these things the day of. That's not horrible, right? 100 calls are about $1.15. So anything above 100, you start making money on that, and that is exactly the expected move. So if I'm an AMD believer, right, I'm going to invest $100 or $115, whatever it is. If I'm wrong, I can only lose $115. And if you get a good 2-3 day rally in this, you can make some money on that. So if I was doing anything, go ahead.
Oh, sorry. No, I was just cutting in to say, because people are talking in the chat about the Apple car, and maybe this news is why we got a spike on Apple, which caused a spike in the Qs, which caused. But I don't know how true, because Tesla's trading up in the past. If that was really the news moving tech, wouldn't you suspect that Tesla would be down on that news?
No. Now that Tesla is in the S&P, it moves so much with the rest of the mega cap. It really does move with Microsoft and Apple and Amazon and Facebook and Google.
Yeah, I mean, look at today. This thing traded with the spiders today, right?
Yeah, it moves with
that big move down early in the morning, and it's been crawling up ever since with the spies. So
yeah.
It's John says they do everything well. I have problems with my MacBook. I don't know, John. Go back 30, 40 years in Apple and see what your returns have been.
I don't know.
They do everything well. Let's put it this way. I don't know if they do everything well, but the stock performs well over time.
I have mixed feelings about my MacBook Air that I bought right before the pandemic, and it's been a piece of crap. But definitely don't recommend a MacBook Air. If you're gonna get a Mac, get a higher performing Mac.
There are, like, if you buy enough Apple products, you're gonna find some problems with a few of them. But find me a tech company that gets you products with, that you're gonna have better luck with, right? I've had PC computers and I've had Apple computers. I prefer the Apple ones because they tend to run smoothly for longer than the PCs.
Also, I don't know if you guys, we mentioned this. I mentioned this, but Apple makes more money from wearables than Netflix does for its whole company. So, we know Apple's a beast. All right.
Well, I don't know that Apple's going to come out with a card, John, but here's a nice monthly chart of Apple. And in April of 2020, the stock was $52. Okay.
Yeah.
Well,
I know.
Know about that.
Well, that's split adjusted. Don't forget they had the split there last year.
Whatever it is, but
yeah.
Still the stock's up 120% over the last couple of years. That's not a bad return.
Hey, why is oil so strong today?
I think it's the whole Russia thing. Nat gas, oil.
Just cause.
Yeah, I mean, nat gas is very strong. It's whatever in Russia. They're starting to pull back a little bit now, but I think it's the Russia headline. Whenever they make a Russia headline, that's when those things start to pop up. What else we got, guys? Any other questions about anything we want to talk about?
No, I don't know. I think that's kind of it. It feels awfully quiet. Obviously, it's going to be quieter because we have a Fed meeting or press conference tomorrow. So nobody wants to make any big moves before the Fed. And then there's a jobs number on Friday, and arguably,
I wouldn't be surprised if we get a pullback from the spiders from here at some point during the day, just to be a little cautious going into the Fed meeting.
That's fair.
I'm going to be looking at some UVXY options for tomorrow and just do some lotteries based on this thing was 18 and change yesterday or yesterday morning. We traded up to 19, and didn't the VIXY get up near 35 where everybody says was it 35? No, we didn't get that high in the VIXY. It was a VIX. Let me look. Yeah, the VIX got above like 36 or whatever it was 2 days ago. And historically, that's where you get a pullback. When this thing gets up to the $35, $36 level, you get a pullback, and we exactly did. I'll be doing some lotteries in the UVXY, see if it moves up or down $2. I'll probably be leaning towards the put side because I don't think anything's funny is gonna come out of the Fed tomorrow. We'll see. Those will be my lotteries for tomorrow, up and down a couple of bucks.
All right. David
All right,
Green.
guys. Always my pleasure to be here.
Pleasure as always. Pleasure is ours. Hope you have a great rest of your week. And
Stay green.
stay
Mr.
green.
Stay green.
Hey, good one.
All right. Thanks, guys.
That's clever.
I try.
Do you just think of that?
I
just now?
did.
Just now? That was good.
Speaking of clever, I saw a comment from Brad in the chat earlier that I thought was very. I liked it. I don't know. There's probably going to be some people that don't. He said stabilizing the market, guarantee 25 basis point hikes here would solve inflation more than raising rates, as people will put their money back in the market versus spending it. I think there's some truth to that. I think there's some truth to that. You make the stock market a more investable place, the market a little bit better. People will put their money there as opposed. The problem is I don't think the people that would really put their money back in the market.
No, they're not. Two different people. Two different classes of people.
Right.
Wait,
Are the same people spending money in the economy.
A rate hike is still a rate hike, though. A quarter point or a half point, a hike is a hike is a hike to me, right? So,
But the problem, my problem with just raising rates right now, which I've made this point on the show before, but I'll reiterate it, is just the fact that there are certain areas driving inflation more so than others. There's inflation across the board, yes, but certain areas are still driving that inflation higher. If we want to see prices in those areas used in new cars, right? And part of that is getting the chip shortage figured out. Energy. We obviously, throughout this Russia fiasco, have learned that we, not as much here in the U.S., but just the West in general, is reliant on Russia for energy. Basically, the bottom line is you're not going to bring prices down in these areas by stopping investments flowing into those areas. And that's exactly what you're going to do when you raise interest rates. You're stopping investments into those areas.
You're not stopping it.
Slowing down.
You're making it less attractive. You're making borrowing money more expensive. You're making it hard. You're just increasing friction. Just friction on deals, friction on borrowing. That's what it does.
Well, and also, I mean, they don't say this part out loud, but when they talk about raising rates and tightening the economy and curbing inflation, part of that means unemployment going up. They don't want to say that part out loud, you know, but what you're saying is you're just creating friction, which causes hiring to slow down, which causes unemployment to go up. It's just crazy to me that, and I get it, the Fed, you know, they're doing what they think independently is the best right now, but how scared people are right now. Like, if I wouldn't want to do anything that could possibly lead to
a recession.
People losing their jobs in the midst of rising inflation.
I don't think people are losing. I don't think we're there yet.
No, I'm saying that's an effect of rising interest rates in the past has been, because typically the Fed, and historically the Fed has stepped in and raised interest rates in a
to slow down like
a growing fast economy. Right now, there's a lot of indications that we're not there yet. We're not there at that growing fast economy. The GDP.
It's hard. It's hard because there's conflicting signals. On the one hand, we have crazy inflation. On the other hand, we have low employment. Low unemployment. So we have pretty full employment right now.
I don't think we really do have low unemployment.
Hold on. So someone just come out. So something just happened here.
Sorry. The unemployment isn't even where it was pre-COVID.
No, but it's close.
Right, but we're not even back where we were 2020, and the interest rate. We weren't talking about raising interest rates then. My point is, let's get back to that. Let's at least get unemployment back to where it was pre-COVID, before we do anything to slow down the economy at this point. Because I don't know if we need that.
I don't know what that move is just now, guys. But the home market just turned. Wait. You see this comment in the chat just now from John Smith? I have a family member who is high up in Netflix marketing. The marketing department has 5 people. It's supposed to have 34. I don't know if that's true. I'm going to take John Smith's word for it. That's alarming. But we know that Netflix has been cutting costs, right? They've talked about that.
Yeah, I mean, that's been the headline. They had the thing where they told employees to be more stringent with hiring and spending money and whatnot.
Yeah.
Jay Rice in the chat saying they have to slow down for housing. I mean, so for the housing thing, that's
Dude,
a,
oh my
a
God.
whole nother thing. So the mortgage rate has increased
What a mess.
quicker in a year than it ever has.
What a mess.
What the problem here
you and I are so screwed. Man.
No, what the problem is here now is because I think the mortgage rate is up to like 5 or 6% or something. No, 4. I don't know what it is.
The average 30-year fixed, you mean? Yeah,
something like that.
Yeah.
4.5, somewhere around there. If it continues to go higher, what ends up happening is you have people that are on the fence that were maybe going to buy a house, and then now with the higher interest rate are not going to buy a house. So what are those people going to do? They're going to rent instead of buying and owning. Yeah. So basically, a higher mortgage rate could end up causing an even higher spike in rent prices because there's going to be more people trying to rent instead of trying to buy and own. So,
dude, I know. Like, man, I could go on for days about the housing market and how messed up it is. I'm not going to though. But dear Lord, housing is totally screwed. It's so messed up. The whole market is upside down. No one knows when it's going to stop.
I don't have a lot of confidence that really the Fed is navigating this properly, nor do they really. I mean, it's obviously tough, and they don't have anything like historically to kind of go off of, and they're just kind of guessing here. But I think they're raising interest rates to curb inflation because that's what they've been taught is right, and what they understand is right, in the relationship between interest rates and inflation. But my point being just that inflation in this case is not caused by the economy running too hot or anything like that. It's just increased demand. And you could literally see it. There's empirical data that shows the demand increase for things like used cars, new cars, right? In the past, if we've gotten inflation, it's because the economy is running too hot. And so that's been the old adage of like the Fed's job is to take the punch bowl away from the party just as it's getting started.
Oh yeah.
And I just don't know if we're partying yet. I don't know. I think they're taking away the punch bowl too early.
The problem is there are people that think we've been partying for a decade, and there are people that think, oh, the party. What do you mean? Party is mixed signals.
Andrew, I kind of agreed to let the market run for too hot too long. Like if they were gonna act, they should have.
Well, it's also worth noting that the Fed was buying treasuries for like 2 years. Like when did they start? They started buying treasuries when? March or April 2020? And when did they stop? Like last November.
Yeah, and now they're talking about...
They were buying bonds for a year and a half.
And now they're talking about even selling some of those assets, not just letting the taper and letting them kind of run off, the purchases run off. They're talking about selling some, and people are freaking out about that. Like, oh, we've never had the Fed sell assets, and they own this many assets. It's going to create this whole new level of uncertainty of what could happen. And it's just like, if the Fed does sell some of the assets that they've accumulated, what does that? It's not gonna be the end of the world for the economy or for the stock market, right? The Fed, our central bank, bought some assets, and now they're gonna unload some of those assets. That's the bottom line. That's it. And you have people, economists, freaking out over it as if like the second they sell some of these assets, everything's gonna fall apart.
I hope that the Fed raising rates does destroy some housing demand, because that would help me just a little bit.
But I mean, think about people that have bought houses, even like as investments. There's probably people that have bought houses.
They'll be fine. I'm not worried about them.
I'm not worried about them either, but there will be a bunch of people that are pissed off if that happens, if housing prices drop because of the higher mortgage rate, because of higher interest rates.
If you have a house, if you own your home, you have no leg to stand on, okay, as far as complaining about anything, in my opinion. Someone in the chat said they thinks the Fed's going to go a quarter point tomorrow. I tell you what, if the Fed, who just said that? It was Mumble Rap. Tell you what, Mumble Rap, if you're right and the Fed goes a quarter point tomorrow, my advice to you is to buy a lottery ticket, because the market is like near 100% convicted that they're going a half point. So if you're right, buy a lottery ticket. That's my take. But I think you're wrong. Based on what the market is pricing in. What else here? Wait, there was a bunch of comments in the chat that I wanted to like address. Oh man,
I see one right here from Jay Rice talking about Expedia and Airbnb. I get it. Airbnb is going to trade with Expedia and some of the other travel stocks, but I think there's also you'll also see in certain industries kind of seismic shifts here and there. And I think in the travel industry, that's what we're going to see with Airbnb versus some of these legacy players. Like, it's possible that Expedia reports a terrible quarter, and Airbnb reports it. It's like when we had Snapchat report a good quarter and Facebook reported the terrible quarter. It's like maybe that doesn't mean
Wait, no, not this time.
no,
Okay.
last quarter in February. So
Okay.
Facebook reported,
Yeah.
Snapchat traded down like 25%
Yeah,
off of it,
and
and then they
and-
reported good.
Yeah.
Because basically this market sentiment was social media
Yeah.
bad,
Right.
trading down, and then it
Right.
was like, oh, maybe all social media not bad, maybe just Facebook not growing while Snapchat and some of these smaller, kind of newer, sexy stocks are taking market share. So Airbnb, like Expedia, is more hotels, flights, and all that, right?
Well, that leads me to my question. As a trivia question, I was going to ask you: do you know the Expedia brands, like the brands under the Expedia umbrella? It's gonna be a blast from the past. You ready?
I think I just saw. on
Ju-
your
ju-
computer
just
some of them.
guess a couple. Just guess a couple.
Under the Expedia brand,
Yeah, like I think these are like brands under.
Priceline.
No, that's booking, man. All right, so hotels.com.
Okay.
Okay, Orbitz,
Okay.
Hotwire,
Okay.
Expedia, obviously, and
Okay.
then they also work with like Trivago, VRBO, which
Is VRBO? Expedia doesn't own VRBO though, do they?
wait, I thought that's what this. I'm on this page on Expedia's website. It says Expedia.
Okay, so
Expedia Group
Expedia
brands.
does own VRBO.
I think they also own Trivago, but not all of it clearly because it's a public company.
Okay, so that kind of goes against my point. Was basically that Airbnb, we may just be seeing this seismic shift of Airbnb being the new kind of not go-to, but taking substantial market share away from hotels and sites like Expedia, saying, hey, even in a quarter where Expedia reported not a great quarter, maybe Airbnb is able to. I could foresee that happening. So I that was my only point on Jay Rice's comment, saying Airbnb is going to trade with those stocks for now, but I wouldn't be surprised if that changes in the future as Airbnb establishes itself apart from kind of more of these other established names in the industry.
Yeah, all right.
But if Expedia owns VRBO, VRBO
I don't think they do own VRBO.
does essentially the same exact thing that Airbnb does.
Expedia owns Travelocity. Wow, have you thought about Travelocity in years? They own Orbitz, which I didn't even know was still in business, honestly.
No, you remember those commercials back in the day?
Dude, so many. Oh man. Okay, I'm glad you mentioned that. That in and of itself was like we talk about like like sexy industries, right? Like fad industries. That was such a fad.
Well, I just don't
It became so commoditized so quickly.
How did
Anybody can do that.
do what?
Anybody can create travel listings
Oh yeah,
and aggregate them.
well, I just don't get how it's like that was like our gambling commercials now, right?
Yeah.
A commercial break of like a sporting event in 2005, you would see a Trivago commercial, a Hotwire commercial, a Price. I mean, you remember that?
Dude.
Priceline negotiator.
Dude, William Shatner. Yeah. And then it's like, wait a minute. This is such an easy thing. Anybody can just do like throw some code together.
Kayak.
Aggregate a bunch of listings for hotels and airplanes, throw some algorithm behind it, and bada bing, bada boom.
And then Google was like, oh yeah, we can do that too.
Google was like, all right, we're just gonna do it ourselves.
That's
yeah.
the problem with any like web-based tool that's useful. Google's just gonna be like, oh yeah, we can do that too.
Dude,
Like
yeah.
I exclusively use Google Flights now. I think
too.
Spencer was the one that showed me Google Flights.
Yeah, I use
it's
it.
so easy. You literally
No.
just type in Google Flights.
Can I give everyone a Google Flights tip?
Sure.
If you're gonna look for flights on Google, go incognito, okay? Because Google knows when you've been looking for flights.
I
Go
could be wrong.
incognito.
I could be wrong, but I think there were some like class action lawsuits about this time. I think
I always go incognito when I'm looking for flights.
I think the
always.
airlines might not do that anymore. But in the past, if you looked for like a certain flight 3 days in a row, like the third time you looked on it, they'd jack the prices up because they'd know like, oh, this person really needs to or wants to go to this place. So we can keep like launching or raising the rate up as they
God,
look at it.
that was such a. Oh, Dante says Chrome tracks my incognito. Well, that's doesn't make me feel good. Should I just use DuckDuckGo for everything? It feels like this.
I don't know if you can use DuckDuckGo for Google Flights. Can you?
I have no idea. I've never been on DuckDuckGo. That's not true. I have, but I don't use it regularly. Wait, there were some more comments in the chat I wanted to address, and then we're gonna have Christian Fromhertz on in a few minutes. But someone asked about the flash crash. Did you hear about that? Citigroup did an oops They caused a flash crash in Sweden stock market yesterday.
Wait, isn't Citigroup the same one where someone like fat fingered like $1 billion?
Citigroup sent money to the wrong person. That's what
Yeah.
you're thinking. Yeah, that was last year.
Yeah.
Yeah, they sent like $5 million.
What's up with Citigroup?
I don't know.
Is that why Citigroup is what it is compared to the other banks?
No, I don't know. You know what I'm like? I don't have a great insight into how the big bulge bracket banks are perceived on Wall Street. But I'm reading the Big Short now, and it's giving me a
I think Citibank
good
is seen
good
as-
insight into how Wall Street perceives the different
I think like
major
Wells
banks.
Fargo and Citibank are kind of seen on a similar tier of like low
I don't know.
tier, big. What'd you call them? Big
bulge bracket.
bulge bracket.
Yeah,
I don't know
that's
what that means.
that's an investment banking thing.
Okay.
All right.
But I think you're like your top tier, cream of the crop. You've got JP, Goldman.
Citi. No, you said Goldman. That's what I meant to say.
Yeah, you've got JP, Goldman. There's what Morgan Stanley maybe, and then below that you've got, your Wells Fargos, your Citis, your Bank of America.
Wait. This is an educational show. I'd be glad to explain what I'm talking about. If you don't know what incognito is, here, I'll let me just share my screen. Oh, I can't because I'm only on one monitor. Whatever. Just go in Google Chrome. On the top right, there's those 3 dots. Click them, the vertical dots. Click incognito. Supposedly doesn't track your cookies or whatever. Or you just use a VPN. That's also an idea. VPNs, when in doubt, VPN.
I'm gonna take a call here on Airbnb
For today?
Yeah,
Nice.
because here's my logic on it. I'll start by explaining my logic by saying this is first and foremost a YOLO. Wait, hold on. Aaron Thomas is watching this harassment training thing we had to watch for work. This guy in it, is he like? I feel like I've seen this guy that's in it.
Wait. Sorry, what are you talking about?
It's someone else. Did you watch that like harassment training thing for work?
Yes.
The bald dude in it.
He's like an actor that you've seen.
I feel like, and I tried to figure it out while I was watching it, so I couldn't. Aaron Thomas. I gotta slack him. He's got his headphones on.
That dude was definitely in like, I don't know, like Home Alone or something.
That's what I'm saying. Like I was watching this and I was like, I know who this actor is they hired to do this, and he's on Aaron Thomas's screen right now.
Wait, Aaron Thomas is doing the training now, dude. We had you like a month ago.
Dude, I know.
Where you been for the last month, Aaron Thomas? Holy moly!
We had an exchange earlier today that I think reminded him that he needed to do it.
Holy moly! All right.
But back to Airbnb.
Yeah.
Wait, Rohan, can you please try to like
Comments?
what?
Is that what you want?
Comments? What? No.
Get Aaron's attention.
I was
his
just trying to
attention.
figure out if there's some way we can figure out who. Like I literally tried to like reverse image, like screenshot him and reverse image search him, and I couldn't do it. This guy, that bald guy on your screen right now, he's like an actor that I've seen before. Who? From what?
All right. They're talking about the commercial actor now. And whatever.
We gotta find something else he's in.
All right.
All right, back to Airbnb. Basically, my
you.
thought process on it. It's a true YOLO. Earnings are tonight. I'm buying calls that expire this Friday.
Can I tell you the good or the bad, or the bull case and the bear case here?
Yeah, of course. We
Yeah.
just basically it's already trading down as if it missed earnings 6.5% today off this bad Expedia report.
Yep.
I like any time the bar has been set pretty low because I think if Airbnb were flat today and then they reported like a decent earnings, there's a chance the stock would be trading down tomorrow. With Airbnb down already 6.5% today, if they report that same decent earnings, I say there's going to be a pop. So not saying it's a smart thing to do. Again, it's YOLO. Most option contracts expire worthless. You should know that going in. But that's how I'm going to play.
Yeah,
Airbnb.
it's not as if it's trading down for its health, right? I mean,
Exactly.
it is trading down because the tea leaves, i.e. Expedia last night, we already had Hilton, right, report as well. The tea leaves are not looking super positive, right? So that's why it's down. It's not just down for no other reason. But I'm gonna hang my head on that stat from earlier, right? Every single time Airbnb reports, it's only been 5 quarters now since they've been a public company, but the stock pops after. It doesn't hold those gains, but it does pop after earnings. So that's my take. Sticking with it. You guys know I'm long Airbnb for like a longer term swing trade / investment. So no trades for me here, but I do like the stock. I like the stock. What can I say? I like the stock. Somebody was asking about. Sorry, I'm scrolling way up now because somebody is asking. They asked about Airbnb, which we talked about with David. Or sorry, AMD, which we talked about with David. Chip trade's been rough. Qualcomm had an unexpectedly strong report. That kind of set the tone a little bit, but AMD, Nvidia haven't been able to hold gains. I'm gonna venture, even if it is a good report, even if the stock does go up, it's probably not gonna hold. That is my AMD take for tonight. By the way, we will be streaming the AMD and the Airbnb earnings calls tonight. YouTube.com/Benzinga. AMD is at 5 p.m. Airbnb is at 5:30 p.m. We'll be streaming both of them tonight on our YouTube channel because that's what we do.
I'm just gonna do a quick what's a city people travel to a lot?
Vegas, New Orleans.
New Orleans is perfect because I'm going down there this weekend. There's Jazz Fest down there this weekend, which is a big deal for New Orleans. Apparently, I'm just gonna look on Airbnb at New Orleans, and if there's like no Airbnbs, I'm gonna say, oh, demand's pretty strong.
Wait, you asked what's a city people travel to, and Dante's first guess was Dallas.
Oh my god,
I don't know about that. Maybe people go there. I've never been to Dallas. I'm sure it's a great place, but is that really your first guess? I would guess New York, Vegas, Chicago, New Orleans, Miami, LA, whatever.
All right, there's supply out here.
That's bearish.
Yeah, but I mean, New Orleans is a big city. Lots of places to stay.
Yeah, you know what? The bar is low. The bar is low for Airbnb tonight. Okay. You ever been to Niagara Falls? I've been there. Great place.
I've been there from the U.S. side, not the Canada side.
I've been there from both sides. All right, let's go to. Oh, we're gonna have Christian on in 2 minutes. Shoot. Okay, then I want to save my segment. I was gonna run through the most searched tickers on Benzinga Pro for the month of April or March. Excuse me. No, April. We're in May now. We'll run through that after Christian Fromhertz. And we have Christian at 12:30. That's like right now. We have David Mazza from Direxion. Okay, wait. They can't hear what he just said.
All right, so we figured out where this guy that was in some like work training video we had to watch. This guy was like super recognizable to me, and it's like an hour-long thing. So the whole time I'm watching it, I'm like, where the hell do I know this guy from? And he's some like, B-list actor that's just been in some like commercials or whatever. But Aaron Thomas just did some good research and found out he's the dad in Evans Stevens, a show on, what was that, on Disney when I was a kid. So that makes sense.
All right, I guessed Vegas when you were asked for a travel city. The reason I guessed Vegas is because we're going to Vegas next week. Aaron and myself and producer Rohan and others.
Wait, I'm going now?
Yes, you're going.
I
told you yesterday.
Oh, he's also in Blades of Glory. All right. Sorry, continue. Hitchcock.
We're all going to Vegas. And so is our next guest, Christian Fromhertz from Tribeca Trade Group. He will also be in Vegas for the FinTwit 2022 Summit. If you have no idea what I'm talking about, just watch this and then you'll know. All right. All right, let's bring on Christian Fromhertz, who will be in Vegas next week with us. Christian, what's up, man?
Hey, guys. How's it going?
Did you like that spiffy video?
That was really nice. It gets me kind of ready, excited.
I know.
And just next week. I can't believe it's next week already. Sometimes when you plan these things out, I feel like they're so far out. But
Don't we know it?
this
But
is next. Go ahead.
Flights have been booked. Flights have been booked. We are confirmed. Everything is a go, go, go. So if you don't have your ticket, you should.
It didn't sound like Aaron was whether he knows whether he's going to be going or
Oh,
not. He just got to
he's
throw him on the
going.
plane.
We are going to throw him on the
Hey,
plane.
if they throw me, yeah, I heard that they're gonna zip me up in some luggage and put me like underneath the plane, which will be fun. I mean, I've never ridden a plane like that, so I'm excited, Christian.
Well, it's
Listen,
cheaper-
there could be a
it's
lot
cheaper.
worse places to be stuffed into a suitcase and be on a trip. Vegas is I would say is a good thumbs up if that's what happens to you.
So so prices are expensive. So what we're gonna do is we're gonna just throw you in a carry-on and
Yeah.
just like put you in the overhead bin.
Fine.
Yeah.
We'll make it happen.
Okay,
I've
good.
actually never been, so I'm pumped if we do.
Oh
end
wow!
up.
Oh, good question, Andy.
First time Vegas trip. That's really going to be interesting for you.
All work though. It'll be all work. Christian, any names since any developments in your trading world since last week when you had you on?
Yeah, I mean, well, this market just continues to be very complicated, but very interesting. I mean, certainly we have not experienced the downside pressure like this have. I think for a lot of investors, they may have never experienced it before, but it doesn't matter. Like even if you have experienced this type of bear market, which I think is what we can call this at this point. It's been a while since we've really kind of seen this kind of shake out and, a market kind of that's been going down like this for months. So I think, I try to remain very optimistic about this because I have seen these bear market plays out. And I know that every time that we're in one of them, if you go through, the ones from, the big ones, right? The 1999, 2000, the 2007 to 2009, which I traded institutionally at Merrill Lynch. And, it was it was a tough period to go through. But at the end of the day, out of all of these bear markets, the market has ended up higher. So forgive me for being a little bit of an optimist, but I think that, if you're sitting on your hands right now and you're kind of saying, hey, I'm being patient and I'm waiting, I think that's one of the best things that you could be doing and realizing that this world's not going to end. If it ends, your puts aren't going to work either too much too, because you're not really going to be able to, do much with them if the world does end or there's some type of catastrophe. So I do kind of stick to that. That has helped me in markets over time and in my career. Sometimes, as I look back at some of those experiences that I've had through those bear markets, it did feel like the world was going to end to me because a couple of those markets, they were just down. They were prolonged down. And if I could just share a quick story too about what I experienced in 2008, 2009. But one of the, you kind of look back and you say with the market, obviously much, much higher from where that level was in 2009 when we finally bottomed. I think it was 666 in the SPX. And clearly we're leaps and bounds above them. But you kind of, some people will ask, well, hey, wasn't that a great buying opportunity? Like, did you crush it, buying down there and so forth? But the situation when that was happening was you began to not be too much as the market wasn't your number one worry. Working for a bank and working in trading back then, the number one concern for me was whether or not we were going to have a job, basically, in the coming months. So the market kind of was a backseat to that. I had seen that through those times, colleague after colleague go through, rounds of layoffs and so forth. And, there was a couple weeks there where you didn't know if your company was going to make it. So, you kind of look to where that situation was and why I wasn't buying the dip then, because it just wasn't the top priority. And I think we're just in a different situation than right now. And yeah, I do want to go over a couple things that I'm watching when.
Yeah, and Christian, I hear that a lot, kind of like anecdotally, especially in Silicon Valley, right? That Silicon Valley in like the mid 2000s was so cutthroat, and everyone was driven to create the next billion-dollar startup, and just very hard and kind of rigorous working. And then all these billion-dollar tech valuations over the past 10 years has kind of like soften it up. Like people, it's just like now cushy to work in Silicon Valley and work for some of these startups that are getting valued at these crazy valuations. And now people are anticipating that, okay, maybe as the fiscal policy tightens up and there's less money just being thrown around willy-nilly, that things are going to start getting a little more cutthroat, at least in like Silicon Valley. That's what I've heard.
Yeah, and I think one of the things to remember too, and to take a step back and have some perspective, is that the market does go in cycles like this. Bear markets are a part of the market, right? The market isn't just supposed to go up. I also think too that one of the like this might end up being a good thing. Now, I don't know if it's a couple weeks, a couple months, could be next year. It's one of those things that you have to be kind of neutral and let it play out. But from a valuation standpoint, it was getting very, very frothy. To some, it was getting crazy in terms of the price to sales ratios being multiples and multiples. So I think that at some point it was inevitable when the trends were going to the uptrends were going to break. But I also view it as a good thing, for now anyway, because we're not done, moving to the downside. But I view that we needed to have a market reset. And this has been a pretty good one at that.
Yeah. I mean, like, for example, Root Insurance on the private market was valued $6+ billion. Now it is trading $1.83 a share, market cap of less than 500 million.
Dude, some of the, was that a recent IPO?
Root, I mean, I think it Root IPO'd. Let's see.
Some of these IPOs / SPACs,
October 2020.
A lot of the stuff that's gone public in the last 2 years has really just been horrible. Like that's ground zero, frankly.
I mean, imagine getting valued at like $5-10 billion. Next thing you know, your market cap's less than half a bill in like 2 years. It's crazy.
Yeah,
I think frothy.
What you guys are talking about too is what we saw too, and various different markets where just things got out of hand. Like the one that everybody talks about, but there's many of these from like 1999 and 2000, were like the pets.com and things like that. But there was so many companies that just at the time you kind of knew in the back of your mind that it didn't really make sense. But you were just kind of as they say, or what's the right expression? While everybody's dancing while the music is on, something like that. Anyway, but once the music,
I get it exactly.
I think I butchered that, but
you get swept up in the bubble, like while everything is there, because that's what you're surrounded by.
And it's a trend.
Fish and water thing.
And you don't know when the trend is eventually going to end. But I shared my screen. I wanted
we'll get it pulled up. Are there any names right now that kind of fit in that bucket of like you kind of know that things still don't really make sense in terms of valuation fundamentals?
Well, I mean, I think a lot of the damage is being done. I mean, I think that some of these names, we're not. I don't think that I'm certainly not sticking out my neck to say that some of that they're bottomed, but you've got a lot of names that you don't know what half these come. I know the one, of course, the example is the Upstart, right? Where nobody listen. A lot of people didn't know what they did, and that's the case. That if you really like, and that's what Warren Buffett says, and he takes a lot of heat about some things that he says. I'm not going to go down that the line of what he said in terms of if I had $25, this still wouldn't make sense to me. But his there is something to the Warren Buffett. Like if it doesn't make sense to him and if he doesn't understand it, he doesn't invest in it. And I think that you're going to continue to see some of these names where, as one of your colleagues says, Dennis, he says, hey, this has got a great story to it, but it doesn't have much more than that. So I think that it is important to look at value. You don't have to be an expert in fundamentals, which I'm not, but you need to have some basis of what a PE ratio is and what that means and what price to sales means, right? It helps to have that depth.
It's hard though, Christian, when that stuff just did not matter. Really, I mean, you can say for a decade, but I would just say at least for the last 3 or 4, 5 years, it hasn't mattered. Valuation hasn't
Absolutely,
frankly
it
mattered.
hasn't.
So
Right? While
you
the
know,
Fed, has been injecting money and being,
yeah,
throwing in stimulus, it hasn't mattered. But
no.
the story does change, and that's what we're experiencing,
That wasn't you,
currently.
Christian, by the way, that went on CNBC and didn't know what Upstart did, was it?
What's that?
No.
I'm just kidding.
That was
Minervini or
a certain man whose name rhymes with Schminervini.
Schminervini?
Yeah, I reached out. I asked him to come on the show, and he wouldn't do it.
Well, listen, I
Ah.
have huge respect for him. I was in the same contest that he was last year, where
Yeah.
he won first place. I finished I did finish in the top 5, but I didn't win the contest. But
Yeah.
there's something there's definitely, as you guys have guests on every day in your pre-market show, it is so valuable to hear different perspectives of traders who have a track record and have kind of been through these things, and also just know how to trade the market really well. And sometimes it's you could the old analogy and technical analysis is sometimes you don't even need to know what the ticker is, right? If you cover up what the ticker is and you're
Yeah.
just looking at the chart pattern, right, that should tell you a decent where a decent setup is. Now, knowing, of course, what the company is, what it does, and you know whether there's relative strength in that group, and what's going on, provides depth and can kind of help you with conviction and staying in a trade through the bumps and the turns. But at the end of the day, a lot of what many traders are doing is just trading setups, and they can translate that, and that's what I try to do in my trading as well, to a risk reward setup, right? Knowing when to get in, knowing when to, planning your trade, knowing when to get out, and so forth. These are very important things. And so while we joke around, Mark Minervini is one of my top follows, in terms of what he's taught people, and his books are just hugely valuable. So
Well, that's what I think is so interesting right now, Christian, is that you can have, like you said, we have so many different guests on, and we can talk to 2 different guests that have been trading in the markets for 20 plus years that have completely opposite viewpoints on where the market's. I mean, one person could be super bearish, someone could be kind of hopefully optimistic like you are right now, but both of those people, even if they're on opposite sides of the bull bear spectrum, if they have that many years in the market, the similarity between them is they're going to know how to manage their risk, right? They're not going to go all in one way or the other, that in the next month they think the SPY is going to go up this much or down this much. So to me, that's been my biggest lesson in talking to people that have been in the industry for so long that have different viewpoints, is there's always a similar importance placed on risk management.
yeah, absolutely. I agree. I agree 100%. And at the end of the day, it is what it is. It's about trading, investing. It is about making money. So viewpoints are one thing. I think is more of my goal always in the market is to be as objective as possible, to take the information that you're dealing with, and make you know put together a process of how to execute a trade, and try to obviously get the risk reward skewed in your favor. So there's a lot more that we could discuss about that, but we only
Yeah, well,
have
let's bring up your charts here, Christian, and
yeah.
walk us through what that was. This is the S&P futures that we're looking at right now. But
Yes,
so
yes.
walk
So I
us
always
through what
start
you're
with
seeing.
the S&P futures.
Mhm.
If you've watched some of the analysis that I've done before, I'm a big fan of volume at price, right? So what we're looking at is the weekly chart of the S&P, right? So this value area is based on the market profile of last year. So all of that price action, all of that volume is condensed into what we refer to as a value area, which is a significant area of where a lot of the price and volume has occurred from last year, right? So one of the levels that you've heard me talk about on Twitter quite a bit is this bottom of value 4071. Now, this is a place for me to kind of watch. There's something called an 80% rule that is now played out. We've traveled all the way from the top of value to the bottom of value.
Wait,
So,
explain the 80% rule.
so
People
the
that don't know
80%
this.
rule is when you start a period, and in this sense, I'm on the weekly chart, so we're talking about the period of 1 year, right? If we start the period as we did above value, and you break inside the value area, and you establish yourself, what triggers is what's called an 80% rule. And that means, again, it's not a 100% chance. It just means that there's an 80% chance that you're going to travel from one side of the value area to the other, right? So that is now complete. And now what's next is basically to see if today's Tuesday, right? And this is a weekly bar. We've got a Fed meeting tomorrow. But what I'm most interested to see if the support that I've been talking about now for months, if it's actually going to hold. And then we can kind of see, and again, this is the bigger picture. It's the weekly chart. I do a lot more short-term trading, but I like to look at the big picture and then drill in from there, right? And then kind of look for some things, some more hints on some shorter time frames. And when we look at the daily chart, each value area is based on the month. So we just started the month of May. This value area is based on April's volume profile, right? And notice that we're deep below the value area. So we've got a lot. I think that this market, you kind of just have to take it in stride. That even if we bounce, right? We got a nice hammer bar yesterday. We're going to be met with resistance, but that's a significant distance higher. So it kind of can help you plan out your trading plan in terms of what you're expecting in this market. I think it's possible that, now that we've kind of touched that level, that there's a bounce that could happen, but it may be a short-lived bounce. Because if you kind of think about this overall year, it's a midterm election year. It's probably going to be bumpy a good portion of this year. But maybe the trend can kind of straighten out once some more time goes by.
Another way of saying that is just there's a lot of overhead supply. People stuck,
and
trapped, and want
one
their
other
money back.
point too, if I can. Sorry, I cut you off.
Yeah, no, go ahead.
Is the Nasdaq, right? So if you want to look at Nasdaq Futures, or if you look at the Qs, right? Again, nothing is guaranteed, and this 80% rule you could see on the top left of my screen. This has not been complete yet. So that level for me is 297.74. Again, it's not 100%, right? I'm open to all possibilities. I'm open to a bounce like we saw here. Notice where we ran out. We hit resistance up at 369, and that was that really marked the top of the rally, what we saw towards the end of March. And now we're kind of sitting down here. So again, I think like another bounce could be in play, but I think overall, this group is experiencing, the most pain this year. And I'm more prone to kind of say this is going to be a harder turn, but we'll keep an eye on it, right? Because not every stock is going to act exactly the same way.
Isn't it funny how, like, all through the fall, maybe I'm just speaking for myself here, but it seemed like the focus was on the Russell, the IWM. Oh, the Russell, the chart looks so bad. All these small caps, rates are going to be increasing. It's bad for companies that need to raise money, like a small cap. Well, the Russell looks horrible. And now all that anxiety has been replaced on the Russell has been replaced by the Nasdaq, because that's like you said, it's been the worst performer this year. But it's not as if the Russell's done any better.
No, there's not a lot. There's not a lot going on here too, and this is actually a different looking picture. Both of those charts that I just showed you on the weekly, the S&P and the Nasdaq, are both inside value for the year. The difference here with the Russell is, first of all, you had a very slim value area, which indicates that you could see a big move, and we have seen a decent move from 214 down here, and I'm not sure that this move to the downside is done either in the Russell, but I think we are getting to places. I actually was in a Russell, a short IWM trade that I established on Friday. I actually got out of it yesterday. I made a little bit of money on it just because I think with the Fed this week, I just think anything could happen. The price action, the sentiment right now is pretty skewed to the ugly side, which is good. That the sentiment is pretty washed out. But I kind of just view this week as anything could happen, and I've got lower levels. I think if we get up to 192 in IWM, that could be a place to kind of reshort. But I would rather kind of let that setup materialize first.
All right, that's a good overview look. But let's drill down a little bit if we can here, Christian. I want to know what sectors or what stocks in particular have your focus right now.
Yeah, so I mean, we're probably we're about 65% of the way through earnings season. I don't what would you say? How far are we through earnings season?
If I had to venture a guess,
50%.
In terms of what, quantity or the stuff that we actually care about? Because in terms of the stuff we actually care about, we're probably like 75% through. But in terms of sheer quantity, it's probably like 60%.
Yeah, that's a good way to look at it.
Yeah.
The big mega caps have all reported now. You're going to get things like a Shopify reporting and so forth, and an Airbnb today. But what I try to do during earnings season, number one, I find it very difficult to swing trade because I'm more of a swing trader than anything else. This market this year has been very good for day trading, so you've had to put your day trading hat on if that's if you're in the same bucket as me, more of swing trading. But for swing trading, it's very difficult to swing trade during earnings season because, if you look at some names, for example, one of the areas that I probably had talked about one time on your show was, hey, the opening plays have been acting very well, like the Hilton. And, I've discussed Avis, I think at one point too. But, it's kind of interesting to see reversals in this space. Expedia is down 15%. And I have to read into this. But this, for example, is like, hey, a group can be acting very well going into earnings. They say something on the earnings call, and it could kind of just negate all the gains.
I know. That's what they've been doing now. They've been saving the bad news for the call. Like Microsoft did that. And then it's like, oh, great.
Yeah. So that's why I think, what I like to be doing during earnings season, of course, scalping here and there too, but really just observing and listening to what some of these companies, because it's all over the map at this point, right? There's some companies that are really feeling it. They're going to be heavily impacted by either spending or the economy or supply constraints. So it's really all over the place. So what I try to do is, put together a list of names that, and we've seen a lot, like the last couple of weeks, report good earnings and they give it back. Even they give good guidance too. Sometimes it's, it's not so much about the past, but what they say in the conference calls. And so one area that I'm watching pretty closely is the semis. I think the semis, and we go back to this weekly chart just for a second, we've had a number of these names report. AMD reports after the close today, but 224 is the level in the sand for me for the semis. Like, I really want to, for this market to kind of recover, bounce, whatever you want to call it. I think the semis are going to have to at the very least, stabilize. Right. If they continue to break down, I don't think that's a great sign for the overall market. So names, a name that reported last week, and I have no position because I'm just doing more watching and sitting on my hands because this market, has just been the way, we all know the performance of what happened last month. It's been better, in my opinion, to be in, heavy cash, which is what I am in right now. But Qualcomm had
Wait. How heavy? Sorry.
Right now I'm over 90% cash in my trading
account.
Yeah.
That's a lot.
Yep.
All right.
And I've been that way for, I don't want to say like, oh, I've been that way for the whole year. No, I was heavily playing a lot of the relative strength areas of the market. I was very, very much participating in all the different commodity plays out there, the energy, the coal, the agriculture, the nuclear plays, right? So even some of the lithium plays too. But I didn't like how they started to look a couple weeks ago. I got dinged in a couple of them because I was holding a couple of those. And I just decided to say, you know what? If they're going to take out the commodity plays, if those are going to act weak too, let's kind of sit back and watch a little bit. So I've been that way for about a week and a half. I've been kind of like dipping my toe back into the market here and there, but not with anything more than like a than a starter position. I'm also doing quite a bit of day trading, but I really want to get through the Fed meeting and also earnings season. And I always think that you're going to find things like, an LNTH, which, I mean, talk about relative strength. So this is a medical device company. They reported when they reported last time.
This was the only stock. What day was it? Like Thursday, I think, or Friday. This is the only stock I looked at. I did a quick screen. The only one that was up, like 5% or something that day was this one.
Yeah.
What type of medical devices?
I have no idea what this company does.
They're involved in a couple different areas of I think they do a lot of like supplies too, for the medical devices. But the issue with this one, so I do have what I refer to as a starter position in this one, and I held this name, not a big position at all, right? But I got out of it prior to earnings because I just thought it had been on too big of a run, and this is one of my success stories over the last quarter. And right after earnings, I said, I want to be back into this name. But this is the way I think that you have to think about this market is, hey, this is really it's up a lot, So the thinking for me is if this comes back in and retests $60, which is also like the 20-day moving average, here's where I'll get more aggressive. So starter position on the gap up. Let's see if it wants to continue to kind of grind higher as it did last time. If it doesn't and it comes in and holds, 60, I'm a buyer in there.
All right. Now, and again, the if then thing is what it's all about there. If does this, then that. All right.
Yeah,
I'm surprised to hear you bring that up because I never heard of that stock before last week, and again, it
really
to me like yes, maybe
yeah.
I should have, but I haven't.
Well, it's one of those. Well, it came on. I didn't know the company either until last quarter, and I listened to all the news services and so forth, and I see these reactions, and I try to what's called put together an earnings list, and even if it's not names that you're that familiar with, put the names, put together a list, and you could use various different systems for this, but put together names that had a really good earnings reaction. And what I try to do is, even if they're not names that I'm all that familiar with, I try to learn about them because that's where you can really find, potential leaders of the next quarter until they report the next time. But there are so many good opportunities, and you have to kind of stay fresh to say, hey, this company is doing something different. Because I really think one of the things that we're going to come away with this year is we're going to come away with new leadership in this market at some point, right? And it may not be those names that everybody's comfortable with, right? And maybe a whole new set of names, could be a couple different groups, but I think really keeping an open mind, I think is what it's all about right now.
Question from the chat about Bree asked about Airbnb since we talked about that earlier, but it's good to get your take on it, Christian, because they're going to report tonight as well. So
I've looked at this chart so many times. I've tried to trade this name so many times over. Well, I probably haven't traded it once this year, but it's just too sideways to me. I like the company. I use Airbnb. But even like before, like this price action going into earnings doesn't look great, but it doesn't mean it can't bounce on earnings. But when I look at a chart like this, I have no edge. when the pattern is sideways, you could see I've got a trend line here from basically November, the November highs. What is this telling me? Well, every time it's tried to go higher, it makes a lower high. That's not a good pattern. It's not a good technical pattern. It's got to get out of that. So I'm happy just to watch Airbnb and have zero position until it just acts better. Because even before this peak, this was ridiculously hard name to trade. It's not trending. It's sideways.
See, I look at that and say, hey, it's sideways. It's not down. But I hear your point. That's
a good point.
From a trading perspective, yes, I'd certainly hear your point.
From a long term, if you wanted to hold this for the long term, it just means like you got to have a lot of patience, and I would rather it show me And another name that comes to mind too, which I can't figure out, and that's it's okay not being able to figure out names, but look at Uber, right? I haven't traded Uber in a long time too, even though I've seen all kinds of option activity, and you hear they scramble into calls in Uber. I've never been able to see this name really work on any option activity. It's too hard. It's too difficult. Move on to, we've got so many other symbols, so many other areas of the market. Do I need to figure out this chart? No way. It's way too difficult. Do I use Uber all the time? I'm in New York City. Absolutely. I use Uber, Lyft. But I can't figure it. I could be a fan of the company, but I don't have to be a fan of the stock, because this is a ridiculous chart.
Okay, wait, last one before we let you go here. Since you're in New York, have you used an Uber through a yellow cab? Is it, because remember that's
it's a good question. No, I haven't. I'm so I am a creature of habit, and I do look at I have the two apps on my phone, which is Uber and Lyft. I don't know, I would be open to doing that, because I find that sometimes, even in New York City, as busy as New York City is, sometimes nowadays you have to wait a long time for you may have to wait a long time for an Uber or Lyft. Sometimes you schedule it and you see, it's not arriving for 15 minutes. Not to complain about that, but that's not how it used to be pre-pandemic. You'd have an Uber in New York City within like 2 minutes.
This is bullish, or it means lack of supply, which is bad. But Christian Fromhertz, follow him on Twitter. Seriously, check him out. At @CFromhertz on Twitter. Tribeca Trade Group is his
and in Vegas
his
in a
group.
week.
And he'll be in Vegas next week. We're gonna hang out, get some drinks.
Aaron, we're gonna hang. First trip to Vegas.
Christian, what table game can you teach us?
Craps.
Oh, excellent! Because I just learned the basics like last month, and I'm still the noob though, so I need someone with me to hold my hand and make sure I'm doing it right.
Well, the nice thing about craps is you could be on the table like poker. It's intense.
Yeah,
like you got to be your full attention. Awesome. Craps table, you could kind of have fun and relax, and also play and have some strategy too.
Oh man, I'm hyped. I'm hyped. All right, we'll see you next week, man.
Take care, guys.
All right. One area of the market that is not doing all that bad, depending on your take right now, or
inverse leverage ETFs.
Yeah, inverse leverage ETFs.
It's just a shot in the dark.
I was just thinking about this yesterday, and I was like, all right, I've got Dave Mazza from Direxion coming on today. What do I want to talk about? I could do like an FAQ thing, because we get a lot of questions about these things and how they work. Or I thought, wait a minute. Everyone is looking for what things to buy on the long side, right? I want to go long, and I don't want to lose my shirt. What can you buy? You can buy inverse leverage ETFs because they're working. It's one of the few things that's working right now. If you run a screen for like all the top performing ETFs for this year, almost all of them are going to be either energy or inverse leverage ETFs. That's because that's the market that we're in right now. So without further ado, let's bring on Dave Mazza, who is head of product at Direxion. We're going to run through some of these better performing names and what they do and maybe how you can trade them. So here we go. Joining me now is Dave Mazza, head of product at Direxion. Dave, how are we doing today?
Doing well. Happy to be back. What's happening?
Not much. As I said, I was going through running a screen of all the ETFs for the year, and both in general and under the Direxion umbrella. And here is, I guess it's a good news, bad news thing, right? I'll start with the bad news first, right? The bad news is that of the Direxion slate, I think you guys have 84, I believe, 84 leveraged ETFs. Of the 84, about 19 are up year to date. But the good news is 19 are up year to date. That's incredible because nothing is up right now. And I'm talking funds that are up 10, 20, 30, 40, 50% this year. So there are pockets of outperformance, which is one of the unique things of of inverse markets. So just explain real fast, and then we'll get into specifics at a high level. Inverse ETFs. Why do you have them, and what do they do?
Yeah, so I think it's a great point. Inverse means the opposite. Not to sound pretty silly, but that's what they do on a daily basis. These funds provide either a direct inverse, so in the case of inverse 1x of the performance of a particular index or area of the market, or they do so with leverage versions. So really the idea here is that these products can be used in two ways. One, as a hedge, and I think we've talked about that before,
Yep.
but two, also on down tapes or on volatile tapes for someone to have a tool to take the opposite opinion, again, on daily basis. These are tools for tactical trading. So you have to make a buy, sell, or hold decision on a daily basis. If you don't have the ability to do that, stick to other ETFs or stocks, what have you. But if you do, these can be powerful tools because, again, in a down tape, they're going to provide amplified exposure on the upside, because if markets are down, the inverse is going to provide the positive return generally.
So I want to ask the opposite of the same question I've asked you previously, which is if I look at, for example, the WEBs, WEBS, which I believe is your top performing ETF this year. It's your bearish internet stocks ETF, right? And I'll pull up the chart up on the screen, and you can see how strong it is. David, this thing is up 50% this year. Why shouldn't I own this for a few months if I'm bearish technology stocks?
Well, look, I mean, you've heard me say this before, right? So this is providing a bear exposure 3 times. And what we can see is, look at that chart, right? If you had bought it on that initial uptrend when markets first were wobbling to end the first quarter, yeah, of course, you would have felt pretty good about yourself. But the payback would have been pretty hard in the first half of April. Now, as markets have lost their footing again with all the headlines that are coming to bear, we can see that Webs has had excellent performance. So the volatility of this trade is really high. It certainly paid off, again, if you were able to stomach that. But look, we're going from $35 to about $20. Pretty sharp drawdown. All of that's recovered. So again, got to use these. You got to make that buy, sell, or hold decision daily. Doesn't mean you can never hold them overnight. But if you don't have the ability to monitor it, that's when I say stay away. But yeah, the tape on this has gotten a lot more positive since markets, slipped in mid-April.
And I guess what it really comes down to, David, is you don't know what it's like to lose half your money or more until you do it, until it happens to you. And because like you could look at, and I've done this before as well, but TECL, which is the bullish technology fund, you pull up a long-term chart and you're like, this is cash money. But what you don't see in this monthly chart is all the intraday or intra-week volatility, all the times where you had to stomach, due to the leverage rebalancing, a massive drawdown. And it's painful. It's painful to take that, right? So no one knows what it's like to lose that money until they lose it, until they're facing it. And then it's like, oh, geez, right? So
exactly. So that's why we advocate these are not buy and hold investments, because if you were to look at that chart before the sell-off, to your point, saying, well, where can I find anything better? But that's not the reality. At some point, whether it's mean reversion, markets are rotating, macro issues, that when these trades go against you, they can go against you pretty sharply.
Exactly.
So that's really why right now, we're seeing a big uptake in the inverse exposures as opposed to the bull funds. So that's bear versus bull, because they're, we're in a volatile market. But either way, especially on the bearish funds where they're taking a negative view, because markets, when they do trend, they can trend positively quickly. You got to have the ability to monitor that.
Yeah. So outside of Webs, which jumps out because, again, I believe it is your best performer, at least of the last month or so. What else? I'm imagining like there's the Lab D would jump out to me. But like, what other bear funds jumped out to you? Because there's a lot we could go through that are up, just in the last few weeks, right? 20, 30, 40%.
Yeah, well, Webs is giving you that 3x on inverse exposure on a daily basis to that internet name, right? So that's your Amazon, your Meta, Alphabet, Cisco, Salesforce, your really like your old school internet names, along with some newer funds like names like Datadog and Cloudflare in there. But it's a heavy concentration on those old school big tech names. Now, LabD, to your point, is another fund. Biotech, Moderna's, the tape on Moderna is a bit better today, and some of the others. But man, biotechs, we've talked about that before. They can't find any love in this market, even as the broader healthcare sector does a bit better. And so that's LabD. It's kind of, year to date, certainly it's had some positive returns, but it's been pretty choppy. Generally, look at those drawdown days; they're pretty sharp. But the again, since markets really kind of faltered again in April, LabD has just been on a tear. Not that dissimilar to what we've seen with the internet names.
Yeah, this one also jumped out to me. The HIBS, the HIBS, which is a bearish 3 times ETF on high beta stocks. So explain what that means.
So I love its bull brother is HIBL, and then it's the bear brother is HIBS. What I love about these particular names, set aside its performance, is the way that the names are identified. So it's the 100 stocks within the S&P 500 on a monthly basis that have the highest beta. So the basket's going to change. So it's kind of always ebbing and flowing to what's actually volatile. And that's why these two products are really great for trading. So if you can be comfortable knowing, hey, the basket might be different this month versus last month, but it's always going to be identifying those high beta names. Excellent for trading. And you can just see kind of the HIBS chart here, sort of all over the map over the last few months. And that's not a bad thing. Again, really good tool for tactical trading. It's always going to be honed in on those volatile names.
Real fast, how often does that basket change? Is it monthly?
It's going to change monthly. Now, there is, of course, names that are almost always in the basket. Tesla, right, comes to mind.
Sure.
Enphase Energy is one that's been in there for a while. Some other semiconductor names. But you'll see, Twitter's in there now. You're going to see that move based off of its trailing, basically the trailing beta to the S&P 500.
This is so interesting. So it's kind of hard to see it on this chart, but if you look closely, you can see that the biggest green candles correspond very strongly, dare I say exactly, with the biggest down days on the purple line. The purple line is the SPY right there, right? So on the days where the overall market is down the most, like here, look, last Friday, great example, right? Last Friday, market just puked into the close, right? It was a tough day. Look at that green bar, that huge green bar in HIBS, right? It was up almost 10% on Friday, right? So this is pretty inversely correlated with the overall market. So on days when we're puking, which is not today, really, but on days when we are puking, this seems like a pretty strong candidate to hedge that downside.
Yeah. No, exactly. And that's how these products should be used. And especially in this market, we've particularly seen the most volatile names, which have been some of the biggest winners in COVID and just generally the last few years, have been the most impacted on those negative days. And look at the bull chart right there. You can see it and feel it. So as those names have been sold off, the inverse exposure has done quite well.
And likewise today, so HIBL is the bullish version, right? So you're betting on 3 times upside here, and look at the SPY today. I mean, again, it's here. If I go to intraday, you can see maybe a little better, right? I mean, the SPY is green today, right? We're up 1.5%. Look at HIBL today, right? It's up 8% today.
Yeah.
Well, no, over 2 days. So since the start of the week. But you get the idea, right? They're pretty strong. The relationship to the overall market is pretty strong, right? HIBL, you're getting the magnified upside. HIBS, you're getting the magnified downside. All right, let me go back to the list here because there's a few more tickers that jumped out to me as far as just strong performances. I noticed that JDust, Dave, JDST, which has been your 2 times inverse bearish gold fund, which has had a nice couple of weeks here as gold has sort of floundered.
Yeah, it's had some good pops. It's the kind of gold, the gold mining space. Gold's had a bit of a tough run. Obviously, controversial asset. Its performance this year has probably been outside of the expectations of most people looking for an inflation hedge.
Yeah.
And the miner stocks, have not been helped by that. And so this is a bear fund. So again, 2x on a daily basis, but a basket of junior gold miners. So these names are more speculative in nature. They tend to be more volatile, higher beta to the price of gold and other commodities. But this is a good, it's a good fund to hedge hedge exposure to gold mining equities. Very, very volatile. So someone needs to have their ability, again, focus on this on a daily basis. But you can see when it runs, it can run pretty sharply with big gaps up, because a lot of this basket has exposure to non-US companies, Canadian, Australian, what have you.
Yeah, it does seem like you could just pick a sector and find the inverse leveraged ETF that corresponds to, and it's up, right? Like we did biotech, we did tech, we did we're gold. You can do China, right? Which has the yang, right? And
yeah.
Pick a sector, and if you have a bearish fund, chances are it's doing pretty well right now. That's
Correct.
Just pretty straightforward concept.
Yeah, and at a minimum, I think as I said before, we continue to see so much activity on the bull side, right? People are shifting from being positive on semis or positive on trying to make a positive view on miners. But in this tape, it's been really sell first, ask questions later. So the bear funds, we advocate there are tools available for traders too, right? So it's not just trying to pick the bullets exposure. Look at the bear funds too, to potentially provide some upside on a down day.
And I think that's the biggest takeaway here, right? Is these are, on days like I keep talking about last Friday because it's fresh in my mind, but there seems like there is absolutely just nowhere to go from the long side. There's just nowhere to go. Stocks, commodities, crypto, everything was down last Friday with one notable exception. That's the inverse funds, right? They were all trading higher because that's what they do. So that's what this is about, right? It's just about on days like that, if you're a long-only trader, on days like that, they give you an option. That's what we're talking about here. Okay, great question from Lighten Up on the chat. So Direxion, stocks their basket with a set of funds and establishes an inverse position. How will they behave when the overall market makes a definitive move the opposite way? Great question.
Good question. So again, these provide daily returns. So it's the same as the bull fund, but it's really on a daily basis going to be the opposite. So if an underlying index is up 3%, or down 3%, the bull fund's going to be down 9%, the bear fund's going to be up 9%. So it's about that just daily exposure. So we're agile on a daily basis, but especially if you look at some of the, choose your chart that we had before, especially in the bear funds, because of volatility we're seeing in the market, we are not going to track that return over a 2, 3, 5, second you get out to a 5-day period. So the bear funds, especially, they're not. You gotta be looking at them on a frequent basis, but on a daily basis, we're going to provide that inverse return.
Yeah, that's a really great question from Lighten Up. All right, Dave Mazza, Managing Director, Head of Product at Direxion. Any other pockets of strength in your family of funds that you wanted to highlight?
I think we hit sort of the important areas, and I liked your line. If there's a sector, especially on a day like Friday, and some of the today's a bit of a relief rally here, which is good to see, especially going into tomorrow's FOMC. Look to see if there's a bear fund, and that could be a tool for you to go long, to go short.
Yeah, awesome. All right, Dave Mazza, we will talk to you again next Tuesday. Have a great rest of your week, sir, and I hope we can talk about bullish funds one of these days. But
let's do it.
I guess the market will determine that. All right, have a good one, sir. All right, 1:20 p.m. Eastern time. We'll have Tim Quast join us in about 10 or so minutes to do some market structure talk. At least I think he's joining. Maybe he's joining at 1:45. I don't remember. He's joining us at sometime in the next few minutes. There's a few other things I wanted to hit on. I wanted to do my most searched or most popular tickers on Benzinga segment from the month of April. We'll do that when Aaron Bree gets back because, as you can see, he left me. He's gone. I don't actually know where he went. But he's not here right now, so I'm by myself. When he gets back, we'll do that. Okay. Did I miss anything in the market in the meantime? I haven't looked at. Oh, are we flirting with a high of the day? Dare I say we're flirting with it? What's the high of the day in the SPY? 418 what? 418.93? Yeah. Flirting with that high of the day. That's good to see. Do we have an itinerary for Vegas? Yes. Let me get that here right now. Oh, wait. Do we? Let me check. We should. Let me check for you. Good question. Who asked that, Jim? We should have one. I'm playing around on the website. Oh, wait. There it is. There it is. Okay. Here, I'll just share the screen so you can see what I'm seeing. Jim Cruz asked. All right. I went to the FinTwit 2022 website, finTwit22.com. There is an agenda tab there. So this is there's 2 stages on both days. So this is the agenda for Wednesday. On there's the A stage and the B stage. I don't quite know where I'm going to be yet. But here's the agenda for Wednesday's A stage. You can see we're talking real estate. We're talking risk, controlling your risk, super important. That should be interesting actually for people that have their own followings. That could be fun. We're talking options. SIBO's doing a thing. Oh, nice. It doesn't go super late. Good. Sometimes it's annoying when like you're at a conference and it goes to like, 6:30 and you're like, God, get me out of here. I just want to, enjoy people's company. Let's look at main track B on day 1. Ooh, anchored VWAP with Brian Shannon, Eve Bobach and Kathy Donnelly. They are like they literally wrote a book on trading IPOs. They wrote the book on it. Okay. I will be attending this one if I can help it. Jake Wojastik is doing his session at 11:30. What else do we have? A couple sponsor pitches. Ooh, alternative entry tactics. That's interesting. And that's day 1 right there. So again, this is all at fintwit2022.com. There we go. Someone asked my opinion on there's two tickers and they look identical in the chat. So it's one of them is CRXT. What is that? I've heard of that one before. Like you've heard of that, right? CRXT. That's the one. One of these has gone bananas. Oh, it's not CRXT. Oh, it was CRXT. That's the one that went bananas the other week. All right. Man, if you're in CRXT, good luck. That's all I can say. I'm gonna get all these people that are stuck from a couple weeks ago. Yeah, sure, I guess it can go viral again. Why not? And then CYXT. I don't know this company. Sorry, I don't know anything about it. It's a data center co-location company. Okay. Seems like it's a relatively low beta, boring, stodgy tech, right? It kind of reminds me of like IBM or like Cisco in that way. I guess there are worse places to be than the value tech. Well, is it value? Price to sales of 2.2, which is not bad. We don't have any PE data there. And I guess there are probably worse places to be than in the CYXT. I mean, the performance speaks for itself, right? Anything that's holding up right now is, frankly, A+. If you're not down 20%, A+. Whose birthday is coming up? Great question, Shelly. Actually, speaking of birthdays, we have a birthday today.
Who's that?
My dad.
Oh, really?
Happy birthday, Dad. He is turning the
May
big 6'2".
Taurus gang.
The big, Taurus gang. Happy birthday, Dad. Daddy Israel. And
I don't know. I think Shelly's saying my frontal lobe is going to be fully developed when I turn 20. I don't know. It feels like
your birthday's coming up, and so is mine.
Yeah. Mine's on Thursday.
Mine is next week, and mine will be in Vegas. No, not true. Mine is the day after Vegas.
Oh, GL's birthday is tomorrow. Happy early birthday, GL.
Nice.
Taurus gang, may the 4th be with you. He's got a Star Wars birthday.
Dude, that's awesome. Jealous of GL.
I've got a Cinco de Mayo birthday.
That is incredible. My birthday is just a regular old day. It's so funny how your perceptions, like as a kid, I had this perception that nobody had a May birthday, but May is like the most common month for birthdays.
Oh, I know. Yeah, I know a lot of people that have.
Yeah, it's crazy. So 9 months prior to May will be September. September, right?
August, yeah.
August, September? Yeah. I don't know. All right. Hey, we haven't done yet. Let's look at the crypto heat map and see how we're doing today, because I have absolutely no idea.
I have a feeling you're going to tell
me. Is it red? Is it green? Well, I don't know. Is it red? Is it green? Is it mixed? Let's find out. Where's crypto land? All right, not bad. Wait, is this up to date? Maybe I should do a refresh.
Give us a little refresh. It looks a lot like yesterday's.
No, I refreshed it a little while ago. Yeah. Okay. Mostly up to date. Nice. Come on, Bitcoin. Get it back above. Why can't you get it back above 40? How hard is that? Everything else is up. Except for FTX coin. And Avalanche. But
that's rare to see ETH up on a day where Bitcoin isn't.
Yeah, but ETH is just barely up though.
Barely.
6.65%. That almost doesn't count,
I know. With crypto, it's like if you're going to be up, you got to be up 3+%, or I don't even want to talk to you.
Yep. I mean, Luna up 1.85%. What is it? Tron is up 13% today. Dear Lord, 7 cents. A lot of these things are just. I can't buy anything that's. I'm sorry, like I can't buy anything that's like less than a penny, or less than $1. I can't. I guess I could, but to me, it just seems kind of like a joke. It's hard for me to take it seriously. Anyway, I don't take Bitcoin as a joke at all. I take Bitcoin very seriously. That's why I own Bitcoin. If you want to own more Bitcoin, check out Voyager. When you open an account at Voyager using the code ZING, ZING, and you fund your account and you make a trade, they will send you free Bitcoin. Check it out. Voyager is the app.
Are we getting Tim Quast today?
Yeah, I think in a few minutes. But before Tim, I want to do a segment because Chris Cacci does the article every month where he writes up the most searched tickers on Benzinga Pro for that month. Do you want to go through that? Because I think it's interesting.
Yeah.
These are what our users.
I'm gonna guess Twitter is higher up than it normally is.
I was gonna ask you to guess number one, but all right.
Is that number one? Hell yeah.
It might be. It is. Yes. Twitter. These are what our users are searching for. Twitter is the most searched for stock on Benzinga Pro and Benzinga.com last month. No real surprise, right? Let's go to a daily chart. No real surprise. When you did I mention that I sold my Twitter yesterday to you?
No.
Oh, I sold my Twitter. I'm out of Twitter. I sold it yesterday at 2:30. I saw, or somewhere around there, I saw the headline that Elon Musk is looking for more financing, outside financing, to fund his Twitter takeover. And I thought, no, thank you. I'm out. So anyway, Twitter, the most searched for stock on Benzinga last month. You know what number 2 was? It was Tesla.
Of course.
Of course it was.
Of course it was.
Yep. Twitter and Tesla are now bound at the wrist together. Tesla's having an okay day. Just kind of meandering with the whole market. Number 3, the most searched ticker on Benzinga last month was the SPY. You love to see it. I love to see SPY getting love. People searching for it. Wanting to know what the market's doing. Number 4. This is an interesting one. You ready for this one? Remember SBFM?
No.
Yes, you do. Sunshine Biopharma.
Oh, yeah, I do.
Yeah. All right. The 4th most searched ticker on Benzinga last month was Sunshine Biopharma. Number 5. This is interesting. I wouldn't have thought this. NVIDIA. NVIDIA was the 5th most searched stock last month. Wouldn't have guessed that. Had a very rough go of it this year. I mean, not that, the whole market hasn't. But, and they don't report earnings in NVIDIA for like 3 weeks too. But they'll move with an AMD tonight.
Yeah, it's weird that NVIDIA reports so early compared to other chip stocks. Or so late.
So late, yeah.
So late.
The Qs are number 6. No real surprise. People want to know what the market's doing. They look at the SPY, they look at the Qs. Number 7, ATER. This is one of like the longest going we'll call it viral stocks. This stock was at $2 on April 1st. It got as high as $7 3 weeks later. Aterion, ATER, was the 7th most searched stock on Benzinga last month. 8, 9, and 10 are fun. 8 and 9 are fun. 8 is Mullen Automotive.
Ooh, I haven't heard Mullen in a while.
Yeah, how's it doing? Back at $1? Yeah, it's back at $1. How high did that get, Mullen? Whoa, it got to almost $16 in November.
I'm checking out on Fisker too. Fisker's back down to $10.
Yeah. Not great. Hey, spammer in the chat. Get out of here.
Be gone, spammer.
Get out of here, spammer. Mullen was number 8. You know what 9 was? This is so bizarre. Not bizarre, I wouldn't have thought it. Tilray was the 9th most searched for ticker on Benzinga last month. Would not have guessed that in a million years. Gosh, this Tilray. Tilray's at $5. Holy crap. Can you believe that? From 300 to 5 in a year and change. No, wait, more than that. No, sorry. When did the 300 thing happen? Oh, no, that was it. No, it was a few years ago. My chart isn't showing that. Oh, was there a split? Is that why? They did a split. All right. Number 10, most searched stock on Benzinga last month, AMD. Reminder, they report tonight. We're going to be streaming their earnings report on our YouTube channel. Do I think Elon wants to lower his exposure? Yeah, that was my first assumption. That's why I sold it, because I was like, I don't want I don't want any part of that. Whatever. I lost like 50 cents. I'm cool with it. I'm still in the Activision trade, though. I'm still in ATVI. I got that going for me. Robert, you're like the second person today to mention Tattooed Chef.
TTCF?
Yeah, wait, I can't. Oh, wait, is that what he said? Or did he say the other one? I'm sorry, Robert. I can't read. You did not say that. You said True Leave, which I am long and have been long since, when did I buy this stock? Let's go to a weekly. I bought True Leave probably I bought it like April 2020. So somehow I'm still up in this thing. I bought it somewhere around $9. So this thing went all the way to 50, and now it's down to 13. I would say tread carefully, Robert. The cannabis market has not been one worth owning in the last year or so. What's up, Happy? How we doing? Oh, Dante, you know, I've considered Planet 13. What's the ticker again? Sorry. It's PLHNF. Is that what you're talking about? Or wait, no, that's a different one.
Planet, they're small, right?
No, PLHNF is not that. PLHNF is what is that? What is this?
Planet Fitness, maybe.
No, I don't know what this is. No idea what that's some. I have no idea what that is. Planet 13 is speaking of Vegas. Planet 13 has the crazy oh, that's probably what he meant. They have the largest dispensary in the world, which when I say we, I mean Benzinga, we're lucky enough to get a tour of. We have a video of that.
Virtual tour.
No, in-person tour.
Oh.
Aaron Thomas, can you post that video in the chat right now to the tour? I was there. I went to the dispensary when I was in Vegas a month ago. It was large. If I go again, tell your boy Larry to say what up. That's what our producer just said. All right.
No, tell him we said what up.
You're okay. I can do that. Maybe we'll have time next week to go. It's a little out of the way though. It's like off the strip. It's like a 15-minute walk. So whatever. All right.
Airbnb kind of making a move the last 20 minutes. I am now long Airbnb into earnings tonight. Trading some YOLO calls. So it's a plan there.
Ooh. You haven't done that for a minute though, so
No, not on an earnings. Well, actually, I did with Amazon. I bought some Amazon put spreads whenever that was. So that actually worked out well for me.
As a reminder, if you're watching this show, we would appreciate it if you hit that like.
Smash the like, subscribe if you have not
do
already.
it with the elbow. We have a lot of products and things at Benzinga. We are experimenting with how to add more value to the YouTube membership program. We're working on getting some discounts and some exclusive content to just the YouTube members. If you want to become a member, you can just go to our YouTube channel. There's that join button. It's right there. It says join. It's a couple bucks a month right now. We'll be adding more stuff imminently. I suspect we're going to be adding like discounts to our trading school, discounts to our inner circle, with Nick Shaheen, and more. So check that out. If you haven't at least tried Benzinga Pro, I don't really know what you're waiting for. It's free for everyone for 2 weeks. So if you don't know what it is, just go to pro.benzinga.com. I'll put the link up on the screen when I find it. There it is. pro.benzinga.com. Literally, everybody gets a free 2-week trial. Check it out. If you don't like it, fine. I'm not going to hold a gun to your head and make you buy it. But I think you'll like it. I like it. Everyone here uses it.
Robert would like free coffee delivered for a perk.
We can talk about that, Robert. Offline. Let's talk about that offline. How about that?
AB or AO says he needs some AB winners before he joins Benzinga Pro.
Oh boy, that's pressure.
Airbnb calls tonight, bro.
By the way, if you have any feedback for us, any thoughts on anything, email us, guys. We are.
Oh yeah, we did get some good feedback on Twitter over the weekend. Someone was asking when was this show Benzinga Live going to make more of a Twitter presence? So we've taken the steps in securing a Twitter account with the Benzinga Live username, and we will be tweeting memes, relevant news, etc. from that Twitter account. So once that goes live, I'll drop you guys the link tomorrow. Give us a follow on there.
At Benzinga Live?
Yep, at Benzinga Live.
It's not live yet.
Not live yet.
All right.
We're in the process of securing the domain name.
All right. Oh, the domain name?
I.e., I just haven't fully made the account yet.
All right. We are open to feedback. Tweet at us, slide into our DMs, email us, shows@benzinga.com. We appreciate feedback, good, bad, and otherwise.
So yeah, so Twitter account will be
live this week.
Live this week. It'll be lots of fun. You want to follow that account.
Shelly, nothing is wrong with the normal Twitter, but there's just so much going on there that we want to.
Yeah, it's like how Barstool, you know, like they have like a Pardon My Take account in addition to their Barstool account. So we're gonna grow some traffic and whatnot through there. And then if there are other ideas, like Spencer said, we'll take them. You can email us. Shows volume is insane right now. Like trading volume or our audio volume?
I don't know. I think he's saying the market. Wait, if y'all weren't so negative towards the ape community, your followers were literally triple. I don't think I'm negative towards the ape community at all. I personally am not positive on like AMC's outlook.
On just like the stock you're talking about?
On just the stock. And
yeah.
I do think that like some of not all, but some of the dialogue in that community is just very toxic. You are literally not allowed to say anything bad about AMC.
Allie, Barstool and Jake were busy on Twitter yesterday. Who's Jake? Majestic? Paul? I have no clue.
I don't know.
Yeah, it's tough with that community because obviously people, not just the ape community, but people want to read like good positive news about the stocks they're invested in, whatnot. So you know, essentially when AMC was at $40 or 60, whatever its highs were, if we weren't writing articles that were saying, oh, AMC is going to continue going up, it was seen as like, oh, you guys hate us, whatever. And it's like, I don't know. I would rather have the freedom to speak our mind.
I will add, we're going to be streaming the AMC earnings call on our YouTube channel when they don't report for a couple weeks. I think it's like May. I think it's May. Oh no, I think it's May. It might be May 9th. Let me check right now. But we will be streaming the AMC earnings call. And if you remember, we had Diane, oh shit, I'm blanking on her last name, and the CEO of Highcroft Mining. We had Highcroft Mining, the mining company that AMC invested in. We had the CEO on this very show. We were one of the few outlets that had her on after AMC bought the stake.
Oh, so, Elon Musk is on Twitter calling out Apple now.
AMC reports earnings on Monday, this coming Monday. We're going to stream the conference call.
Oh, I think Elon updated his pro pic on Twitter to a pic of him from the Met Gala.
Dude, the Met Gala like upsets the crap. I hate that so much. I can't stand that.
I just love how, like, I don't know. I feel like the Met Gala is one of those things. Like, I feel like Elon has been trying to like champion this like anti-establishment, you know, all this shit, and then it's like
you are the establishment.
He's still gonna go. Yeah, he's literally he's the richest person in the world. Like going to the Met Gala, he is as in that circle as you can ever be in a million years, and yet somehow people still see him as like, oh, here are the elites over here, and then here's Elon Musk.
All right, yeah, it makes no sense. It's a walking contradiction. So we're being asked for our thoughts on Sirius, which is a stock that I like.
What about our thoughts on abortion? I'm just kidding.
Dude, no. Let's not go there. How about that? We can pretend that we did, but we won't. Sirius, this is a stock that, let's go crazy long term. Let's go to a monthly on Sirius. Wow. I think that says it all right there, right? I think that says it all. You might be a little bit young. Do you remember when satellite radio became a thing?
Yeah. Oh, yeah.
Sirius and XM, it was constant ads. Constant. Oh, yeah. Then what happened? They merge, and the stock has done nothing for 17 years. I don't know why it would change now.
I leased a car last summer. For the first 3 months, I had Sirius XM built into.
Yeah, I had that too when I bought my car.
Yeah. So actually, I remember we had XM radio before, like while XM and Sirius were like the satellite radio competitors, and it was like a game changer. Just having no commercials on the radio, like being able to check the selections. I just don't.
It did nothing for me.
Yeah.
Sorry.
I couldn't justify, like, I obviously didn't do I shouldn't say obviously, I didn't do the Sirius XM subscription after my 3-month trial ended, but they kept sending me like deals lower and lower to the point where it was like, we'll give you 6 months for $5. And I was like, all right, that's a pretty good deal. Like I could probably do that. But then I like looked more into it and it was like, and then you're going to get renewed at $60 for the next year. And I was like, it's so easy for me to just like pick a playlist or a podcast on my phone and click play that I can't justify spending money on.
Yeah. The only catalyst that this stock has is whenever Howard Stern's up for a new deal. Because one of these years he's not going to re-sign. He's not going to do a new contract, and when he does, the stock's going to crater because I feel like half their audience is just there for Howard Stern. So, I don't know why. Like, of all the places to put your money, satellite radio, really? I'm sorry,
Yeah.
it's just not a good business to be in.
Knight the Blue Fox female. Let's talk more about Wall Street Bets. That's the thing is I feel like during the whole Wall Street Bets, Ape, Reddit, GameStop thing, Reddit kind of got a bad rap just for being a place like, oh, look at these Reddit investors. There are some great investing like conversations and communities on Reddit. Like there are some like outside, even Wall Street Bets, like before it got kind of taken over by that, there was some good DD being posted. People, I mean, I think even I think Roaring Kitty himself like posted his original DD on Reddit saying like there is deep value in this stock. Here's what the stock price is at, valuing the company at this. Here's what all their total assets. So you can find that stuff on Reddit. It's just the Reddit, like any other internet thing out there, has good and bad.
Dude, it's no different than any other website. There's going to be good in there, but you got to sift through the bad to get to the good. It's no different than it's no different than Twitter. It's no different than any news, anything.
But during the height of the Wall Street Bets Reddit mania, like you turn on CNBC and they're talking about like Reddit investors as if like as a whole, just generalizing this like uninformed bunch when like that's not the case. There are literally like people that work in public markets, work in banking, whatever it is, that like privately post on Twitter their findings
because they can
or not Twitter, what I said Twitter, Reddit, like post well, I assume, I mean, they'll say like, oh, I work at so and so bank, here's what I've found, and it's like I don't know, I assume they're real, they're not just like people faking it. I guess they could be, but that was just my point. Is I think Reddit has gotten a bad rap. Overall, there are a lot of good information, even investing like advice to be found on there.
I still go on the various stock market subreddits occasionally. I still go on, I don't know, every couple weeks I'll hit up Wall Street Bets or hit up Super Stonk or stocks or stock market. And there are some good nuggets in there, but it's a lot, also just a lot of noise. So
yeah,
whatever.
like I like there's r/investing and r/options. I would say in both of those subreddits, I consistently find like good
ideas.
What
ideas?
Well, just information, like thought out, like due diligence. Like I'll literally just go like sort by top of the week, and it'll be like, oh, that's an interesting idea. That's like compiled like actual information, not just X stock is going to the moon. Because at the end of the day, like we're in financial media. Our job is to be objective and to look at what's happening. Like we can't sit up here and say, as even if we're rooting for GameStop stock to go higher, AMC stock to go higher, we can't say that like we are rooting for it or we think that's going to happen. That's not our job.
All right. Tim Quast is joining us. He's having some technical difficulties, but when he gets on, he'll get on. Yeah, I mean, I agree with you. My litmus test is very simple. When I read something, if it makes me go, huh, then that was good, right? I want everything I read to give me like that huh, like it makes the gears turning in your head type of reaction. Anything that doesn't do that, I think, is just a waste. Anyway, things were more fun when all that was happening.
Oh yeah,
things are way more fun.
Fun times.
I hope we get it again soon, but maybe next week when we're in Vegas. Speaking of upcoming shows, I don't know if you're planning to do a show on Thursday or Friday. I'll be out. We will not be doing a show next Thursday and Friday for obvious reasons, because we'll be in Vegas, as I mentioned.
What about next Monday, Spencer? I don't know if I'll be in the office.
This coming Monday?
Yeah.
Oh, Because you're going to New Orleans?
Yeah, I'm traveling back on Monday morning. I think
Oh,
my
all
flight.
right.
I think actually, like with what time my flight lands and everything,
Good
if
to
I
know.
came straight to the airport,
I'll power through, man.
I'd be here in like the middle of the show.
I'll power through. If y'all ever want to come on our show, by the way, email us. Seriously. I ask people to do that and no one does, but email us. shows@benzinga.com. Say you want to come on the show. We would be glad to have you. That's it. That's it. All right. Waiting for Tim to join. He said he's having some he can't connect his camera or his microphone. So maybe I should give him some help. Hold on. Tim Quast is asking for some help. I don't know. He's saying he can't get in. Not really sure why that would be possible. Because anyway, what's up next? We have the roadmap. At 2:00, we have at the close at 3:30. Cannabis Insider at 4. Money Mitch made its triumphant return last week at 4:30. And we're doing, oh, guys, by the way, if you haven't noticed, if you're not on Twitter or whatever, we've been doing a lot of spaces on Twitter.
Yeah.
We basically do what, like one space a day, if not more than that, maybe 2 spaces a day. Check us out. Let us know what you think. And most of them are crypto focused because that seems to be where the crypto community hangs out, is on spaces. But if you're into that sort of thing, check us out in spaces. We're there every single day.
Oh, sorry. I'm just on this guy's filmography, and it's like a blast from the past. Looking at some of these like TV shows from the mid 2000s. You remember My Boys?
No.
Like a show about this woman in Chicago and her like group of guy friends.
No,
Yeah.
I'm sorry. Hey,
Just literally random TV shows from like the mid 2000s.
we have Tim here.
Hell yeah.
All right, let's do it.
Mr. Quast, how are you doing on this beautiful Tuesday afternoon?
Mr. Bree, good to see you. Well, thank you. Sorry about that. For some reason, perhaps for reputational reasons, your studio refused to accept my connection. So
I have trained.
a little
I have
humor.
trained our program well to
You
let
have.
in the
Gotta
in who we want to let in and to keep out who we want to keep out. But today we will make an exception.
Usually you want to keep out the wastrels, brigands, and miscreants. So thanks
Exactly.
for making.
I only knew
making
what
an
one of those
exception.
words meant, but I agree. All right. I just got distracted because I was looking at us on the screen and I was like, wow, it looks exceptionally dark behind me. So I'm gonna turn around and check out what's going on with the weather. Yeah, oh yeah, it's raining and stormy. I didn't even know that. So it's rainy and stormy here. Hope things are better where you are.
Well, we had it too, and we'll take all we can get. Here in Denver, it rained yesterday for about 10 hours straight overnight, and we'll take it. It's been very dry, and we don't mind that at all. And I guess the question is whether the storm is over in the market, which is probably what's on the minds of folks who are tuned to you for those reasons. I've got a great vocabulary word for you, since we just had a few that would be appropriate for the market, and it is not mine. I got it from listening to a segment with Paul Tudor Jones, who's one of the seminal figures in the hedge fund business. He's a global macro trader, which means he uses macro factors to figure out how he will approach the markets. But he said we have a condition called hysteresis in the markets, and it's really an engineering term that means, putting it really simply, cause and effect. That a system reflects the state of its history, and I thought that's a really good way to describe what's happening in the market. And he also used an analogy, and I was just at sea. We were just in the Caribbean, and he was talking about the waves, how the waves in the market in the sea both tend to move in a certain direction, but every now and then when you're out sailing, there are waves that converge. And he described That's how he described the market, that it's in a state of hysteresis, meaning that what will come is a consequence of the history of the things that have been occurring, and that we have a clashing of waves. And he thinks that it's rather epical in nature, meaning this is something that doesn't happen very often. Now, that's a big picture view, and I look at this from the perspective of market structure, the behavior of money behind price and volume in context of rules, and how to approach the market from a short-term trading perspective. And so what do those things mean for people who are participating in the market? Well, it means that we're at a juncture where the amount of change is very likely to be significant. And if you're young, you may not have been through something like this. If you've experienced a 13-year bull market with one little blip there called the pandemic that lasted about a month, and then off to the races we went, this will be something new for you. And there are things you'll want to keep in mind.
Yeah, sorry, I'm just on this. I Googled the definition for hysteresis, so now it seems like a concept that I might need to dedicate like 10 minutes to really look into. But I found it interesting because you said hysteresis, and it's like, oh, the root like for hysteria, just like crazy mania, but that's not really what this word means. So it's slightly different.
Right. It's cause and effect. That there is cause and effect. It's one of the principal things that we talk about in the broad market, and that one of the concepts is new month, new money. That's a cause and effect event. So we're in a new month, and the market now maybe puts together 2 good days in a row. And why is that? Once again, cause and effect. No matter what's going on in the market, people have retirement programs, and they put money to work, and it makes its way into the market. And the day-over-day change in behaviors from April 29 to May 2nd was 20% in the broad market, something we measure internally. And that's a very, very large change, and it was driven by exchange-traded funds, ETFs.
This might be a silly question, but couldn't everything fall under hysteresis? That things in the past are going to lead us to what's going to happen today, cause and effect?
But of course, it's just that people don't think about that. We tend to look at the stock market as every day is the same as the day before, or is just another day that doesn't have the influence of cause and effect. And I think it happens in life that we forget that the decisions we make will have a consequence. The lifestyle choices we make, good or bad, will have consequences, but they may not arrive at the same time. That's the principle of hysteresis. It says there is a lag between cause, the history of a system, and the later state of the system. So what is the history of this current system, the stock market? Well, it's been highly accommodative, and everybody talks about it. Monetary policy. A lot of money has been shoved into the system, and at some point that stops. It's the old Herb Stein principle. It's called Stein's law, that says if something cannot last forever, it will stop. And it sounds amusing, but it fits perfectly with hysteresis, right? There's a cause and effect. Things will not continue to be easy forever. For over the last, through to about November, anybody and everybody, without regard to knowledge of how the stock market works or how equities are priced, could make money in the stock market. Well, that has stopped. And so now it's going to require paying attention to the factors that affect outcomes. And I always go back to supply and demand, that everybody, before you trade a stock, you should know what the supply and demand in it is. You should be aware whether a month is beginning or ending, or if options are expiring. Those are things that have a big effect. You should be aware if a company is reporting results. I'll use Chegg today, CHGG, as a great example. It's down sharply today. Well, you could know that by looking at the supply-demand equation beforehand. It's a good thing to do. If demand is at 1, actually, absolutely on the floor, and supply is increasing, what is likely to occur? It's not an absolute, but it's a pretty good central tendency to say, well, if supply is rising and there's no demand, what will the price do? Well, probably it will go down. And so those things have to factor into how traders think, I believe.
Yeah, and I do see some people in the chat are asking for some specific tickers. Tim, we might have to get you back on another day this week because we are out of time, and I know we got a little sidetracked today talking about definitions of words and philosophy. But
it took me 7 minutes to show up. With couldn't connect. Well, let's finish with this. Let's finish with this. AMD is the most popular stock with retail traders. What should we expect from AMD? And demand is on the floor. It is 1.0, and supply is rising. Now, the supply isn't terrible, but the prudent would look at that and say, well, the likelihood that it rallies strongly is limited. Doesn't mean it won't happen, but there you go. That's my tip for the day. Beware that AMD does not have a great supply-demand balance.
Okay, but in an earnings season like this, have you ever seen that demand sharply increases right before the close, before the earnings come in or something like that, or just overall demand is lower for AMD stock right now than it has been in the past?
It's been a 1 that is on a 10-point scale. It has been as low as you can go since April 11th, and it remains there. And in the last 2 days, supply has ticked up. So that tells us that there are more people shorting the stock than buying it. And yes, I mean, under any circumstance, ordinary or extraordinary, you can look at the supply-demand balance for a stock and have a pretty good idea which way it's going to go. Pfizer had reasonable supply-demand balance, not great, but reasonable, certainly better than AMD's, and that stock's up some today.
Okay.
That's always the way to look at it. Whatever you're looking at, make sure you check supply and demand, which you can do at MarketStructureEdge. Good to see you,
Good to know. And yeah, Born to be Free is talking about AMD's supply and demand. We're talking about the supply and demand for the stock. Obviously, the companies will then talk about the supply and demand for their own products and services. Tim, always great to have you on. Truly, Tim Quast, truly a well of information.
Some would beg to differ.
Well,
it's good to see you.
It's good to see you too, and I enjoyed the conversation about hysteresis and whatnot. So even if some other people in the chat were mad that we didn't take the time to just get the tickers on MarketStructureEdge, next time I promise we'll leave time for that.
Stop the grammar and get to the stocks.
Exactly. Shut up and trade.
That's right.
Or shut up and analyze data.
It's a challenging time, people. Just be very careful right now. This is a riptide market. It can fool you.
Got it. All right, Tim. We'll enjoy the rest of your Tuesday. Stay green, and we'll talk soon.
Thank you. See ya.
No problem. All right, guys. Fun show today. We've gone a few minutes over. We've got the roadmap coming up, so if you want to learn more about NFTs, the crypto space, the roadmap is your place to be, and this stream will automatically redirect you there. So as I end this stream, just stick around. Stay tuned for the roadmap. We'll be back tomorrow on Wednesday. We probably will not be live on Thursday since Spencer will be out, although it is my birthday on Thursday. So maybe I'll hop on, start the stream, let you guys say happy birthday to me, and then leave. Who knows? Friday, no show. Next Monday, we'll do a show. We'll be doing some shows, just not Thursday and Friday of this week and not Thursday and Friday of next week, I believe. To be determined, though. Love you guys. Smash the like if you haven't already. And stay green.